So we start, and today's topic, as we all know, it is business interruption policies, loss of profit policy. Also, we call it. We also call it consequential loss policy. And this topic has been discussed many times, but since it involves your financial issues, also some complications are there, so people find it difficult, and there is a taboo in market that this policy is a difficult policy, and let us not try to go through it. But I tell you, this is the most interesting policy I found in my career, even better than your standard fire policy. Very interesting, very easy to understand. If you just understand the fundamentals, you would love to go deep into the subject. Okay, so with this introductory note, I'm starting my presentation, and thanks for your cooperation. Welcome you all once again to this platform. So fundamentals, let us talk of fundamentals. Slight fundamentals are required. Those who are participating, attending this subject for the first time, so for them, fundamentals are required. So it is a mix of fundamental and complications. Okay, and please unmute all your mics. Okay, that is very important. Otherwise, it will be a lot of disturbance. So fundamentals would be there, and please bear with me, those who know the subject. We all know that fire policy pays only physical loss or damage to the property, which is covered under the policy. But is that all? We all know that this is not the loss which insured suffers in the event of an accident. Fire policy pays for material damage, which we all know as per the terms and conditions of the policy. Just a minute, let me shut down my window. Otherwise, some noise is coming. By the way, are you hearing some noise, extra noise, which is there outside my flat? No extra noise? No. Then it's
there, but it's fine. It's fine.
Huh?
It is there, but it's fine. We can carry on.
Acha, I can carry on. So what else? These are the consequential losses. We always call it consequential loss policy. But now you will say, sir, consequential loss, the consequential losses are covered. But let me explain. There are multiple consequential losses which are following a material damage loss. Okay. In fact, I am getting disturbed. What are the other consequential losses which take place after a material damage loss? Production loss, naturally. There will be a production loss if the plant and machinery is not in working condition, which will result in loss of business income. And this is what we pay under LOP policy. What are the other losses? Reduction in market value of undamaged stock. If the repairs takes 6 months or 12 months in case of major loss, so whatever is undamaged property, that will also get deteriorated. So there is a reduction in market value of that. It is again a loss to the insured, which we don't cover. Loss of opportunity, it is very important. Clients, they get, say for example, a client has got multiple orders, and because of this accident, they will lose the opportunity. All their orders, they will lose to some of their competitors, because the buyer is not going to wait for them unless they are producing some specialty item which is not being manufactured by any other party, any other producer. Unless this is the situation, no one is going to wait. Okay. Then loss of customer, loss of market, loss of goodwill. It is also very important. They lose reputation in the market. If they are why they lose reputation? It is not just because of an accident. Accident is of course playing a vital role, but reputation in the sense that they are inconsistent in supplying the material. The customers are waiting for the supplies and they are unable to supply because there is an accident and the plant is shut down for 6 months. So it results into loss of reputation. Now, penalties and fines. Many times it is a contractual liability. Many times it is there as per their contract that they are required to fulfill their orders within a time frame limit. And if because of accident, they are unable to fulfill their orders, then penalties and fines, they are imposed and they cannot be recovered under your policy, LOP policy. Okay. Now, what is your policy coverage? This is important. Policy coverage. Now, what it says, it covers loss of gross profit. Now, please understand, we do not cover, in general, we say loss of profit policy, but if we go little deep, we cover loss of gross profit. I'll explain what is gross profit because there are multiple terms. Accounting is used, gross profit, net loss, gross loss. All these fundamental terms I'll be explaining during the course of my session. Now, loss of gross profit arising out of reduction in sales turnover due to interruption of business activity due to a loss or damage to insured property at the insured premises by a peril not excluded under the policy. Now, this definition is very, very comprehensive and it covers every damn thing. So on the next slide, I'll discuss the flow also. But right now, please understand the reverse order. What is the reverse order? First of all, there should be an accident in the insured premises. Okay. Another thing is the property should be covered. Insured property we are talking. We are talking of insured property, not uninsured property. Insured property means the property which is covered under material damage policy. Okay. And the loss is caused by a peril not excluded under the policy. What does it mean? Loss is admissible. Then in that situation, if it causes interruption in business activity, naturally, if there is an accident or there's a fire loss, there's an earthquake loss, there's a explosion loss, the business activity is going to be discontinued. There will be an interruption. And if the interruption leads to reduction in sales of turnover, the sales is reduced. In that situation, the consequential loss of gross profit is paid. It appears to be a bit complicated, but it is very simple. On the next slide, you will understand. Please wait for that. Now, there is very, very, very important thing, very important condition for payment of loss, LOP loss. We call it MD proviso. It is very important. What it says, a loss is payable only if the physical loss or damage to the property, MD loss, is admissible under the corresponding material damage policy at the plant premises. The same thing I am repeating. There has to be a material damage policy and loss must be admissible under material damage policy. Then only we can talk of LOP claim, otherwise forget. If the loss is not admissible, I am not using the word payable, I am using the word admissible. If it is not admissible, then BI cannot be paid. And same thing is clarified here. The claim will still be payable if the material damage loss is not paid due to application of policy excess. Sometimes it may happen that policy excess is 25 lakhs, loss is to the extent of 10 lakhs, so nothing is paid, but it does not mean that BI will also be rejected. The question is whether the loss is admissible or not. If the loss is caused by any of the peril which is not excluded in the policy, then the loss is payable. Understand? So this principle applies even under fire policy, fire loss of profit. This same principle applies even under BI section of IR policy. Any BI policy works on this basic proviso, MD proviso. Okay. Now, this is the flow of event I was talking about. The first and foremost thing, there has to be a material damage policy. Without material damage policy, no LOP claim can be given. First of all, no LOP policy can be issued unless the client is having a concurrent material damage policy. Concurrent means the material damage policy should be in force. Concurrent, I should not use the word concurrent. It can be of different date, but at the time of taking LOP policy, it should be in force. जैसे अप्रैल में आप पॉलिसी ले रहे हैं, then your material damage policy should be in force as on 1st April. चाहे वो मई के महीने में एक्सपायर हो रही है. Even if material damage policy is expiring in the month of May, it does not matter. You can take a 12 months LOP policy as on 1st of April. Why? Because material damage policy is live as on date of taking the LOP policy. Now, what client is supposed to do? Your LOP policy is given for 12 months, but as on 31st May, when this material damage policy expires, he is supposed to renew it without fail. Otherwise, if there is a claim during the break-in period, suppose there is a gap of 3 days in renewal of material damage policy. That means during those 3 days, if any accident takes place, which results into LOP claim, it will not be paid. Next is there has to be a indemnifiable loss. This word indemnifiable is very important. Indemnifiable means ऐसा loss जो कि policy में payable है. Means a loss which is admissible, which is payable under the material damage policy terms and conditions. Okay. Third thing, these two things, then it should result what? It should result into interruption in production process. There has to be an interruption. Many times there is a physical damage to the insured property, but there is no interruption to the production process. Many times it happens. Say, for example, if the boundary wall is damaged due to floods or due to storm, do you think your production will stop? No, there is no damage to the production machinery. So your chain breaks here at this point. There is a physical loss or damage in the material damage policy. This is indemnifiable loss. Yes, material damage proviso is complied with, but still there is no LOP. Why? At the third step, this chain is broken. Why? There is no interruption in production process. Okay, then what is the fourth requirement? Not only there has to be an interruption in production process, it should result in reduction in sales turnover. There has to be a drop in sales turnover. Sales girna chahiye. Due to arising out of what? Arising out of interruption in production process, not because of any other reason. There can be hundreds of reasons of reduction in sales turnover. There can be loss of market. There can be loss of demand. There can be loss of logistics services. Hundreds of reasons of reduction in sales turnover. Okay, there will be there can be a non-availability of your sales employees or trucks. There is a strike of trucks, and that time there will be a reduction in sales turnover, but that is not payable unless it is a byproduct of it is resulting due to interruption in production process. Okay, and once there is a reduction in sales turnover, then the surveyor will compute, has it resulted into a loss of gross profit? If yes, then this resultant loss of gross profit due to this arising out of reduction in sales turnover is payable under LOP policy. Any question on this? I think it is crystal clear. There's no confusion. I hope even it is understood by beginners. Okay, so I am proceeding. And I'll give enough time at the end of the session. You can keep noting your question in the chat box. And once the session is over, I will not leave the platform before all your replies are clarified here on this platform. Nothing will remain pending. I will sort out all your queries. Okay. Now let us see major exclusions. What are the things which are not covered? BI policy does not pay if the loss or damage is caused due to, if arising out of following reason, then claim is not payable. What is that? These are the reasons. If the material damage loss has taken place due to war, invasion, act of foreign enemy, hostilities, warlike operation, whether war is declared or not, civil war, all these things, they are exclusion. Now, material damage claim is also not paid. So again, as per the material damage proviso also, you need not write all these things also. This is just for the clarity I am writing. Otherwise, simple material damage proviso. Your material damage policy exclude all these things. Once the loss is not admissible under MD policy, there is no question of payment of loss under LOP. Okay. Same thing here. These are all exclusions under material damage policy. Mutiny, civil commotion, military rising, insurrection, rebellion, all these things are not payable. Or in nutshell, this is the nutshell. Any peril which is not covered under basic fire policy. So if something STFI is excluded, and if the loss has taken place, material damage has taken place due to floods, no BI is payable. It will fall under exclusions. Okay. Now, this is another very important thing, special exclusion. They are general exclusion. So these are the two special exclusions, which are very important, which are there under IR policy also. And here under BI policy or fire LOP, these are the special exclusions, two special exclusions. Please note it down very carefully. Delay in reconstruction or repairs or restart of the plant. Even after repairs, if there is a delay in restart, due to what? One, restriction imposed by any public authority on reconstruction, restoration, or restoration of operations. And the example is pharmaceutical companies. You all know, your experienced underwriters, those who are working and those who are underwriting your pharmaceutical companies. I have got experience with many pharmaceutical companies. Okay. And there I found that this exclusion was bothering them. And it was making hell of a difference. Why? In case of pharma, as you all know, FDA approval is required. And before getting the approval, even if the plant is repaired, it is ready for production, they can't start. They are not supposed to start their production unless they get the FDA approval. And many times this approval takes 6 months, 3 months, 10 months. It all depends. So that delay is not paid under BI policy. Companies, they say, insurance company, as per our policy, it says the moment plant is ready for production, our interruption, our indemnity period ends. We will not pay loss for BI loss for any further delay which is taking place, which is non-approval of this necessary approvals. And not only approvals, any restriction imposed by your local authority, public authority. So this is FDA approval comes only after the plant is completely ready. But your local authority restrictions, they may come, they can be imposed even during the reconstruction. अब कंस्ट्रक्शन हो रहा है, उसी समय गवर्नमेंट अथॉरिटी ने ऑब्जेक्शन लगा दिया कि आप यहाँ कंस्ट्रक्शन नहीं कर सकते, या फिर ये प्लांट जो है दिस इज क्वाइट नियर टू द नियर बाय लोकेलिटी रेजिडेंशियल एरिया, सो you have to construct your new production area at least 500 meters away. So this is going to cause delay. So this kind of delay is again not payable under LOP policy. And another is very simple. Common sense says if you don't have sufficient capital for timely restoration or replacement of property destroyed or damaged, then nothing is payable. Then the insurance company is not responsible. If you delay purchase of machinery for want of money. Insurance company is not responsible for that.
मेरा रूम को बोलो ना पहले कर देना.
Okay. So lack of sufficient capital. See, many times insurance companies, they give on account payment. Many times they give 100% payment also, material damage claim. If it is a small, payment is done. But LOP takes time. Restoration may take time. So on account payments are freely given and that money can be utilized. But client cannot say that, sir, you have not paid me 100% of my material damage claim and I am unable to restart my plant, repair my machinery because of lack of capital. It is his baby. The claim will not be paid. Now, who can take this policy? This is also very important. When I asked this question in one of the meeting at NIA during the course of my session, the students, they are very innovative. When I asked this question, who can take this policy? Then the reply was, sir, anybody who is ready to pay us the premium, he can take this policy. Is it the right reply? Do you think it is the right reply? Yes or no? It is not.
No, sir.
No, very good. Because there are certain conditions, only certain qualified people. Qualified doesn't mean MA pass or BA pass or graduation, nothing like that. These are the conditions, 4 conditions. Number 1 condition, he should have material damage policy in force. In force, it is very important. Expired material damage policy will not work. You should reject the request of taking LOP policy, granting LOP policy, if you find that material damage policy is already expired. It is not in force. Okay. It is in the interest of the insured. Otherwise, even if you give the LOP policy, you cannot pay the claim. And then that time it will be an allegation on you that you are mis-selling this policy, LOP policy. Another thing, unit should be earning gross profit. This is another important condition, gross profit. Because why? What you are paying under this policy, you are paying loss of gross profit. So unless the unit is earning gross profit, you are not going to pay anything. If the unit is already running into loss, what is the fun of giving LOP policy to a loss-making company? You will not pay anything. Okay. So again, it will be categorized as mis-selling. Third thing, I will explain what is the difference between gross profit and net profit and net loss and all these things. What I say, net loss situation can also be covered, but gross loss, if it is a gross loss situation, then LOP policy cannot be given. There is a difference between gross loss and net loss. Net loss is still LOP policy can be given. I will explain in my subsequent slides. Okay. And no LOP policy to be given for standing charges alone. This is now GIC restriction. Earlier, it was a tariff provision, so people were not following it. And I had seen multiple policies. And unfortunately, while in my previous insurance company, I lost many accounts just on account of this reason, that we refused to give standing charges alone to cover under LOP policy, whereas my competitors, they agreed. They say, okay, no issues, we will give standing charges alone. And that is why the entire account was shifted. That was very, very unfortunate. But now nobody can dare to do it because GIC has put this as per in their treaty condition, that standing charges alone, this policy, your treaty will be blocked. Okay. Now there are 5 queries in chat. Let me just see what it says. Anything interesting? Sir, in explosive manufacturing, if after explosion, government authority does not allow reinstatement for this I have already explained. Government, your imposition of government authority, this is not paid. If government authorities, your public authorities, they impose. Then your other query, this is the same query or? Insured has comprehensive ये क्या है? Operation and maintenance contract, including part replacement. The policy has following exclusion: loss or damage for which manufacturers, suppliers, repairers. Yes, if again this answer to this query is again, if manufacturer is responsible, then material damage claim. Please listen. This is a very interesting question, and there is a lot of controversy in the market. Some of the insurance companies are of the opinion that in case material damage loss is payable by manufacturer, it is coming under the manufacturer's warranty. So LOP should not be paid. Okay. And few are of the opinion the claim is admissible. The only thing is liability is not on the insurance company, but it is on the manufacturers, your suppliers. I am of the opinion that unless your material policy triggers, material damage policy, material damage proviso does not comply with, so LOP is not payable under these circumstances. Understand? A lot of people, they argued. They say, sir, how does it make a difference? Manufacturer is paying, but ultimately claim is admissible as per the peril, so far as peril is concerned. But my reply is, claim has to trigger. Claim has to trigger under material damage policy. Then only LOP is payable. Okay. So these are all complicated questions. I think this is not the right time to deal with these questions because right now we are dealing with fundamentals. At last, when we complete this session, then I'll take up all these queries. Okay. So right now I'm closing this chat because these are complicated questions are being asked, which are not supposed to be asked at this stage. Okay. So this slide is over. We will not cover standing charges alone. What is next? What we pay? Again, the question. So again, the reply comes, we pay loss suffered by the insured. No, sir. We pay. If the material damage claim is admissible, then only again material damage proviso. You will find that multiple times this material damage proviso is repeated. Just to remind, just to keep it in mind, what LOP policy will pay anything only if the material damage loss is admissible. So what we pay? We pay these three things. Rather, third thing is not payment. It is the reduction. First of all, we pay loss of gross profit suffered during the indemnity period. How it is calculated, the formula is given, which will be explained later on. Don't break your head here. For newcomers, don't try to understand all these things. Otherwise, you will get confused. What we pay? Loss of gross profit plus increased cost of working. I'll explain this also. It is too early, but mota आपको समझ लेना है. A, B, C. We pay A plus B minus C. The net amount is payable to the client, of course, subject to application of underinsurance. Okay, and there is no access salvage in this particular case. Please keep it in mind. There's no salvage, but access is very much applied. And reinstatement premium is also deducted at the last. In nutshell, we pay A plus B minus C. What is C? Savings in standing charges during the indemnity period. I'll explain this also. Because many times it happens that we are paying gross profit, and gross profit includes 100% of his standing charges, which he is likely to incur. But actually, it does not happen. After the loss, insured saves a lot of standing charges. Like he will reduce the labor, he will cut down the electricity, he will shut off the street lights to save the bill, electricity bill. So all these expenses which he is trying to save is reduced. Now the question comes, sir, it is illogical. He is trying to save and you are reducing. Why we are reducing? Just to adhere to the principle of indemnity. Why? While calculating loss of gross profit, we are including all these expenses. Now, if you are not incurring, you are saving and I am paying, that means it is a breach of principle of indemnity. I am paying you extra, which you are not supposed to get. So if you are saving anything, I am going to reduce that. Why? Because while calculating your gross profit, I have included 100% of your standing charges. Okay, we can discuss further on this particular point. Hope the fundamental is clear. Okay. Yes, somebody has raised hand. Please unmute and ask your question right now.
Sir, actually, sir, just a question, sir. I want to have a clarity on that. See, what we do means there is gross profit, there is increased cost of working. Now, suppose a manufacturing unit have
Listen, madam, please, I am interrupting you because you are going ahead. You are talking of increased cost of working. I have not covered increased cost of working till now. Please raise your query not on overall LOP policy. Otherwise, others will get confused. Don't go ahead. If anything, whatever I have explained till now, if you have got any doubt, please raise your doubt. I am happy to clear it. But if you are going forward, increased cost of working, your failure of electricity, all these questions I cannot take right now because all these things are yet to come. Is that fine?
Okay, sir.
Okay. Please park your question. Don't jump. I know many people, they know these are the basic things, but for the sake of newcomers, those who are joining this workshop with the hope of learning fundamentals, who are attending this for the first time, unke liye I have to do justice, even at the cost of repetition for those who are experienced and who know this subject. Okay. So this is saving is reduced just to adhere to the principle of indemnity. Now, what is interruption period? Now, slowly, gradually, step by step, I am proceeding further. All these important parameters, definitions, which you should know. If you are trying to understand this policy, unless you know basic terms, terminology, you will not be able to understand policy terms and conditions. Now, what is interruption period? This is the period when the business was interrupted. This is a general definition. But the precise definition is it starts from date of loss and it ends when the business achieves the same production level where it was prior to the loss at the insured premises. Okay. So this is the exact definition of interruption period. Otherwise, in general, you say this is the time for which there was no business activity. No, sir. It starts from date of loss. Okay. Under no circumstances, it can start after the date of loss. It has to start from date of loss. Bearing one exception. There is one exception which I'll explain. Okay. Now this is definition is okay. Now understanding what is interruption period. Okay. Just a minute. I have gone. Yeah. Whether my entire screen is visible or something is hidden. Visible. क्योंकि मुझे पूरा नहीं दिख रहा है, मुझे पूरा वो बार चार्ट ऊपर दिख रहा है ना. Anyway, it will go away. Now this is, again I repeat, it starts from the date of loss and ends when the business achieves the same production level. Under no circumstances, IP can commence at a date later than date of loss, except in case of silent risk. I told you now there is one exception. In case of silent risk, it can be allowed to commence from the date of probable date of start of business, because right now the business is closed. Okay. Even if there is an accident, there is no loss of profit to the insured. Reason being, why? Because there is no production. Business is otherwise also closed. So does it mean LOP policy cannot be given to a silent risk? Yes, it can be given, provided it is likely to start within a month, within the policy period. If the client says, sir, my plant will remain closed for 2 years, then there is no sense of giving LOP policy to a silent risk. You can give LOP policy, if the client says, sir, this is April, I'm going to start my plant in the month of July, of course, you can give LOP policy. In that case, even if the accident has taken place in the month of April, your indemnity period or interruption period can start from the probable date, which is 1st of July. Then in that situation, we can give this benefit to the insured. Now, from this chart, you can understand very well what does it mean, how to understand what is interruption period. This is the production level. So the plant was running with this production. And say, for example, it is 5,000 tons per day or per month. This was the production level, maintained average production level. At this point, there is an accident and it is completely drop. The production level comes to 0. Then the machinery goes for repairs. Interruption period starts from this point. This is the start. This is the date of loss. And this is the start of IP, interruption period. Okay. So it starts here. And this is the restart of production activity. Understand? Restart of production activity means machineries are repaired and they are ready to produce. Many times I have seen that some of the surveyors, they cut the date here itself. They say, my dear, your interruption period ends. I will pay loss of gross profit only for this period. But that is not correct. What we are supposed to pay, that when the business resumes the same business activity, the same level of production, which it had prior to the loss. Loss से पहले जो level था, वही level recovery level आना चाहिए. It may take another 10 days. It may take another 15 days. So this period is also accounted for. Your loss of profit will be given not for this period. It will be given for this entire period till the date of recovery. Understood? I think there is no doubt. Any doubt on this particular slide?
Sir, silent risk के regarding एक बार दोबारा repeat कर देंगे.
Silent risk में मैडम ऐसा है कि silent risk में मैंने क्या बोला कि silent risk में ये indemnity period यहां से start नहीं होगा. Interruption period और indemnity period, it will not start from exactly from date of loss, क्योंकि उसमें logic नहीं है. Right now there is no production. If you start 3 महीने का, मान लीजिए 6 महीने का interruption period उसने लिया, indemnity period, तो उसका 3 महीने तो बेकार चला गया ना, because he is likely to start his production only after 3 months. तो वहां पे हम क्या कहेंगे कि इसने जो है यहाँ पे इस सिचुएशन में उसका मतलब जो प्रोडक्शन हम स्टार्ट डेट मानेंगे वो 3 महीने बाद मानेंगे. तो यहाँ पे बेनिफिट इज गिवन टू साइलेंट रिस्क because if it is likely to start its production from 1st of July, I will count my interruption period from 1st of July, not from 15th of April, which is the actual date of loss. Is there still a doubt?
No, sir. Thank you so much.
There is one doubt.
Boliye. Yes, please.
So how come the exclusion will be applicable to it? So the recovery may be delayed due to the exclusion.
Due to the
exclusion for the reconstruction restart.
नहीं, एक मिनट. Just a minute. Please repeat your question.
There was exclusion, no sir. Delay in reconstruction restart and repair. So if that exclusion will be applied,
हाँ, बिल्कुल सही है. बिल्कुल बहुत अच्छा क्वेश्चन है. This is your normal recovery. Assuming that there is no imposition of any restriction from the government authority. Okay, so our interruption period is this. Now, if it is further delayed due to any exclusion, due to lack of fund, due to imposition of government authorities, restrictions, or due to non-getting the approval of FDA approval or competent authority approval, if the actual production starts from this date, so this delay is not payable under the LOP policy. This is what I was explaining. You are supposed to pay the period till the normal recovery. So this delay is paid. Why? Because machinery, they will not start giving full production initially right from day one. Gradually, they will attain their full production capacity. So this is the initial recovery time. This delay is not due to imposition of government authority restrictions. Please don't get confused with this. Once the plant is fully recovered, after then, if there is a delay due to imposition of government authority, and if during this period there is a delay, then that delay will be deleted by the concerned surveyor. वो कहेगा बॉस मशीनरी रिपेयर टाइम में तुम्हारा 2 महीने लगा, and after that the extra delay is due to government authorities. So I will consider the actual repairs period only. I will not consider the period which is delayed due to imposition of restriction by government authorities. Is that fine? Is that point clear?
Yes, sir. Yes, sir. Completely understood.
Good.
सर इसमें एक शशि बोल रहा हूँ सर.
हाँ हाँ बोलिए.
सर जब कोई गवर्नमेंट अथॉरिटी इम्पोज करती है या फिर कोई मतलब कोई भी अप्रूवल की वजह से पेंडिंग है, इन दैट केस रिस्टार्ट पीरियड विल नॉट टेक प्लेस, राइट? हाँ, बिकॉज जो आप बता रहे हो कि मतलब मशीनरी आप ट्यून करते हो उसकी थोड़ा मतलब जब तक वो टाइम होता है रिकवरी पीरियड तक आने में, तो वो तो होगा नहीं क्योंकि वो प्रोडक्शन ही रुका रहेगा, वो तो चालू ही नहीं कर सकते. तो ओनली वो लॉस से मतलब
नहीं, फिर क्या करेगा? बिल्कुल सही है. मान लो प्रोडक्शन स्टार्ट ही नहीं हुआ, तो सर्वेयर कोई वेट थोड़ी करेगा. वो मतलब 2 साल के लिए डिले हो गया, मान लो प्रोजेक्ट स्टार्ट. सर्वेयर क्या करेगा? वो देखेगा कि हाउ मच मशीनरी वुड हैव टेकन फॉर रिपेयर्स इन नॉर्मल कोर्स ऑफ टाइम. 3 महीने है, 3 महीने के बेस को अपना लॉस कैलकुलेट करके दे देगा. The normal repair period is 3 months, and then some period to attain the pre-accident level of production. उसका कुछ allowance 7 दिन का दे देगा, 7 days और 10 दिन दे देगा, depending upon the circumstances, with mutual consent with the client. So 30 days for repairs, 10 days for further attaining the original capacity, 40 days का loss वो notional loss calculate करके कंपनी के सामने रख देगा. Actually the plant has not restarted till date still, क्योंकि वो तो गवर्नमेंट रेस्ट्रिक्शन लगा दिया, उसने बैन लगा दिया, आप यहाँ पे रीस्टार्ट कर ही नहीं सकते. So the client has got 2 choice: shift the plant, but in that case computation of loss will be done only for 40 days or 35 days. Is that clear?
Got it, sir. In case of silent risk,
silent risk में जो probable loss है वो probable date है, likely to restart as per the insured planning, as per the insured record. उसके रिकॉर्ड में लिखा हुआ है सब, उसको लाइसेंस मिल गया, आज की डेट में साइलेंट है. टुडे इज, आज की डेट में अक्टूबर का महीना है. My plant is likely to start on 15th of December as per government records, as per my records, and I have got everything ready. मेरा इलेक्ट्रिसिटी कनेक्शन हो गया, सब कुछ हो गया, everything is record. अब उस सिचुएशन में if there is a loss in the month of November, then in that case my indemnity period will not start as on date of loss. It will start from 15th of October.
The delay in the restart will take place in that case.
Exactly. It will, and it is permissible only in case of silent risk, because there is a logical explanation for that. Okay.
Got it, sir. Got it, sir.
Very good.
Sir, I have a question.
Yes.
It's Srijit. Yeah. So in case of there is a delay caused by the civil authority or public authority, that delay will not be covered by the policy. That's what you said. Is there any extension, like, civil authority clause or something to add to recover that element? Is there any extension to cover that?
Listen, the public authority clause talks of material damage claim, additional expenses incurred to be incurred by the insured in complying with government norms. It is payable only under material damage policy, but under BI section it is a special exclusion and there is no exclusion buyback cover. This is not given. Is
So
that
in,
fine?
interruption caused by civil authorities, there is no such.
There is no such cover available in India.
Okay.
Some of the companies, they are doing as a service level agreement, but that is illegal. Reinsurers, they do not approve it. Those who do it for the sake of converting business, they keep this loss on their net account.
Okay.
Some companies, they do it because business is very important and it is giving me 10 crores of premium. So I will give 15 days margin, 1 month margin. I can give, but I will have to keep it on my net account because it is something I am doing, and on the face of the policy, I cannot do it. People do it as a matter of service level agreement. That is under the table.
But just for the knowledge purpose, sir, in the international market, these kind of covers are available, right? To cover the losses caused due to the civil authorities?
No, BI, material damage is covered even in India. Material damage, any additional expenses that is payable to comply with government authority regulations. That additional expenditure that is payable under material damage policy if the civil authority clause is availed by the client, but not under BI. BI, there is no provision.
Okay, understood.
Okay. Shall we proceed? Acha, Keshav ji, you are raising your hand. Please tell me.
Sir, there's one question regarding to this. If this
Are you
if
Keshav?
that law-
Are you Keshav?
Yes, sir. Keshav.
Please.
Sir, this loss has been occurred during the market. There's a market requirement, and the production is on the very extreme, on the very higher side. And when that loss occurs, and when the all this during this loss and recovery of this loss, then market goes down, and the production unit is not recovering from the actual production which was going on during the.
My dear sir, I got your query. Again, you are asking something which is advanced question. You are asking that I will cover under special circumstances and adjustment clause. I will explain that. So it is a part of that which we have not talked. You are again talking.
Sir.
You are running ahead.
Okay, sir. Okay.
Please don't run ahead. Please be with us. Okay.
Yes, sir.
Good. So we proceed further. Anybody has got any doubt up to what we have explained? I am ready to listen, but no advanced query. Advanced query baad mein dekhenge. At the end of the session, I'll take all questions gladly. Okay.
Sure, sir.
Very good. Now, what is indemnity period? Interruption period I have explained. Now let us see what is indemnity period. There is a slight difference between indemnity period and interruption period. What is that difference? It again starts from date of loss and it ends when the business resumes normal operations, but not later than. The period is defined. This is the difference between interruption period and indemnity period. In interruption period, there is no end date. The period is not there. But if you are taking an indemnity period, policy is always given with sum insured and indemnity period. Okay. And indemnity period says it is for 6 months, 12 months, 18 months, 24 months. For how long you want to take this cover, LOP cover. It cannot be given unlimited. So maximum length is 36 months. And many companies, they are even hesitant in giving 36 months indemnity period. But this is what is allowed as per the tariff. And minimum is 3 months. So even if you take 15 months IP, there is no benefit. You can. Minimum does not mean that you can reject that policy if somebody is demanding 10 days indemnity period. Will you reject? In some of the cases, when I ask this question again in my NIA class or institute class, they say, yes, sir, as per policy, not less than 3 months. My reply is, you can give. But the minimum period for which the premium is chargeable is 3 months. Understand? And maximum is 36. This is what tariff says. Understand? So premium is dependent on length of indemnity period. Higher the indemnity period, your premium will increase. Okay. So this is what the difference. The basic conceptually, it is the same thing. Interruption period and indemnity period is same, but in indemnity period means it is defined in the policy whether it is for 6 months. So that means if the accident has taken place on 1st of July and the period is 6 months, my indemnity period will end on 31st of December. That's all. Even if the plant is not ready for 2 years, company will not pay for more than 6 months. Understood? Or 9 months. Yes, Jayanta Day, what is your query on this?
Yeah, sir. Sir, I want to know how to select indemnity period in a policy. Actually, this is the question coming.
Wait for the next slide. I'll explain how to select. Very good question. But wait, you are again jumping. Now, next slide. First, you understand the indemnity period, logic of selecting adequate length of indemnity period. Now, this is an example. The policy inception is 1st of January. Expiry is 31st December. This is the policy period, LOP policy period. Now, there are two situations where in one case, the interruption period, the loss has taken place on 1st of March. This is the loss. Now the business has recovered on 15th of February. That is after the expiry of the policy. This is the length of interruption period. Okay. Now there are two situations. Please mute all your mics. I am getting some disturbance. So one case I have assumed, case 1, longer indemnity period of 15 months he has taken. So 15 months, when it will start from date of loss. It will start from here and it will end where? After the completion of 15 months. That means the entire interruption will be covered. The interruption is up to 15th of February. It will end here. So the full loss would be payable if the interruption in indemnity period selected is 15 months. Please understand this. This is the date when business has come back to full stream. So now it is sufficient to take the entire interruption period. On the contrary, the lower indemnity period of 9 months. If he has taken 9 months indemnity period, he will be paid only for 9 months. Whereas interruption period is up to 15th of February. That means ये कितना महीना हो गया? 9 महीना तो यहाँ तक हो गया, then 1.5 महीना और 10.5 महीना. 10.5 months is your interruption period. He will not get. He will get only 9 months loss. Okay. Any question on this slide? So indemnity period should be sufficiently long, depending upon various parameters, which I will explain. These are the factors which affect the indemnity period. Based on these factors, you should decide the length of indemnity period. Time required to repair the affected building and or machinery. Now you have to see, the client has to see how much is the time which is required. Okay. What is the time required in case of worst scenario? If the building can be repaired within 6 months, go for 6 months. Machinery, same is the case is machinery. If it is a foreign machinery, you have to go for longer period because lead time will be more. Availability of alternative premises. Many times the building may take 2 years for reconstruction, but the business is such that client thinks that in case of worst scenario, I can shift it to alternate premises which is nearby available. So there is no need to go for 2 years indemnity period. I can shift and start my business from the nearby premises, alternate premises. If it is there is no need to go for 2 years indemnity period. But if it is, unfortunately, it is not available, then you must go for longer indemnity period to take the full benefit of the policy. Otherwise, your loss is 4 crores and you will be getting 2 crores, 3 crores, that's all. Remaining loss will be on your net account. In case of machinery, lead time for replacement or repair of the machinery, it is very important. Understand? So whatever is the lead time, if lead time is more, when the lead time will be more, when the machinery is of foreign make and there is no local repairs facility. In that situation, the machinery will be required to send to the manufacturers abroad, and it may take 6 months, 12 months, 9 months. So indemnity period has to be more. Now, another factor is possibility of repairs within the town, state, or country. If there is a possibility, like your local repairer, they are capable of repairing your machinery, even foreign make machinery. They have the competency. In that case, you can still compromise for lower indemnity period. But you should not take chance in that situation unless you are sure, okay, that yes, it can be repaired locally. Another thing, availability of raw material, spare parts, and labor. Labor means experienced labor, okay, who can attend to that job. Expertise, adequate expertise must be there with the workforce in India. Then, of course, you can compromise on indemnity period. Got it? Any question? So that query is replied. That person's query, how to decide the length of indemnity period, query is replied. Yes?
Yes, sir. Yes, sir.
Good.
Sir, another question is coming in my mind. What is the disadvantage of taking longer indemnity period?
Disadvantage is only one, that you will be paying more premium.
Because
otherwise, all is advantage. Everything is
because
advantage.
of that indemnity factor, or because of that sum insured, sir?
No, because of sum insured, higher the indemnity period, or sum insured will be increased. I'll explain that also. So you will be paying more premium. So unnecessarily, if the work can be done in 12 months, you should not unnecessarily go for 36 months indemnity period. Otherwise, you will be paying 3 times more premium, and that will be of no use.
Sir, coming back to minimum indemnity period, right? Earlier there was provision in a tariff that like the rate will be lower, but now full fire policy rate will be applicable.
What you are informing, I'll explain in my subsequent slide. Okay, what you are saying is correct.
Okay, sir.
Okay, but please wait. What you say is already covered. I have taken care of covering every damn thing in my presentation. Okay.
You have mentioned 2 words. One is time required to repair the affected building and machinery. Second is lead time for replacement of repair of machinery. You have
yes, sir,
mentioned 2 lines.
Okay.
Can you further explain both of these?
Lead time and repair. Lead
first
time
line,
for replacement.
First line and third line.
No, you are talking time required to repair the affected plant machinery. What is the time in case the machinery or building is repairable? How much time is required? Lead time is for replacement. Lead time means replacement time. How much time it is going to take in complete replacement of the machinery if it is a case of total loss. Okay. Chalo, aage chale. Now, important definitions. Now, some of the definitions are very, very important. You must understand. Many of you, I know, you are well conversant with these definitions. Please bear with me for the sake of newcomers. These are standing charges. Many times we use the word standing charges. We don't understand what are standing charges. We also call it fixed expenses. Standing charges means fixed expenses. Now, what are these expenses? The definition says expenses which remain unchanged, irrespective of production level. This word is very important. Irrespective of production level. That means any expense which is not dependent upon the production level. Whether the production level is 0, or it is 100, or it is 200, These are the expenses which remain constant throughout the year. It has got nothing to do with production. Like your rent, if you are into rented premises, it will remain same. Your taxes, minimum demand charges, power. Power means not machinery power. Your power which is given to administrative block, your security block, your street lights, that power. That will remain constant. Water charges, repairs, maintenance, normal repairs, maintenance. Okay, please unmute. Please unmute. I'll have to mute all. Hello. How to mute all? Mute all. Yes. Yes. So these are the depreciation. There is no control whether production is high or low. It does not make any difference. Your interest, bank interest, this is fixed expense or standing charges. Royalty, which is to be paid. Office and administrative overheads. Even if the production is low due to low demand or low supply of manpower or low supply of raw material, whatever may be the reason, your salaries have to go. Your overhead expenses, canteen expenses, they have to go. Provident fund has to go. So these all expenses, they are standing charges. Understand? Now another is your variable expenses. We also call it
what is minimum demand charges?
Minimum demand charge is something, suppose you have got a contract, you are dependent on gas supply. Okay. And you have a contract with coal, in case of coal, in case of gas, or in case of diesel, you have a contract with the concerned supplier. And he says that whether you take or you don't take, I am going to charge you this much amount of minimum money from you. That is minimum demand charge. Because I am keeping my quota reserved for you and I am not selling it into the market. So even if you don't buy, I will charge 100 crores, 50 crores, 40 crores, whatever is the minimum demand charge. This is known as MDC, minimum demand charges. So this comes as a standing charge, even if you are not consuming it, but you are paying. Why? Because you have blocked his supply. Understood? So this is a contractual thing. And many times it happens in coal. Many times it happens in gas. Gas producer, he will not agree to supply itne cubic meter of gas unless and until something is, suppose you don't stop taking gas because your production is stopped, you stop taking the supplies. What will I do? I have got contracts with the just a minute. Yeah. So variable expenses are those expenses which are dependent on production level. If there is no production, no expense. High production, high expense, like your raw material cost, consumables, packing material, stores, direct expenses, your power, fuel, freight, discounts, handling charges. These are variable expenses and we call it manufacturing cost, manufacturing expenses, because they are dependent on production. If there is no production, this all will become zero. Your raw material cost will become zero. Your power supply to the machinery will become zero. Your freight charges will become zero. Your handling charges will become zero. Everything. Okay. Maintenance will be zero. Maintenance to the machinery will be zero. So these are known as direct expenses. There is another category that is known as semi-variable expenses, which are common, which are neither fixed nor variable. This is the third category. And this is very confusing. Like your power. I told you power can be fixed, power can be variable. The supply which is going to machinery is variable. The supply which is going to office block is fixed, standing charges. So whenever these expenses are given at the time of computation of loss, Apportionment of these expenses are done very carefully by the surveyor. If the client gives a power to the extent of 2.5 crores during the entire power expenses, electricity charges, to the extent of 2.5 crores in a year, I will request him, my dear sir, you give me the bifurcation. How much is your machinery power, which has gone to the production house, and what is the electricity which is given to your other than production, so that I can apportionment of this expense can be done in standing charges and variable expenses. Same is the case of labor, production labor and your normal office employees, your gardener, your security. These labor cost, your casual workers, they are standing charges. But your production labor, your workforce, which are working in production house, they are variable expenses. If there is no production, your variable cost, this will go down. Same is the case with maintenance. There are two types of maintenance: maintenance of plant and machinery, production machinery, and maintenance of general office equipments. So again, apportionment of loss to be done. Yes, Mr. Keshav, raise your query.
So I just want to have once again this clarification. In the variable expenses, we also mentioned that in direct expenses, power, fuel, freight, discounts, and in semi-variable also we are using a power thing.
So you have not listened carefully. Yeah, same thing I am explaining. Power has got two components. Same thing I am explaining now. Power is coming as variable expenses, but it is also falling under semi-variable. That means the power has to be bifurcated. It is 100% not a manufacturing expense. It's one component will go under manufacturing, another component will go under fixed. That is why it is falling under variable expenses.
Okay, sir.
Understood. So yeah, power means production power. Ideally, I should use the word production power. Power which goes to production machinery is variable, and this power, electricity charges, this power is your going to office premises.
Okay.
Got it? Good. Now, very important thing, again, fundamentals. We have been talking about gross profit. Please understand what is gross profit. This is the most simple thing, but again, I found it is the most complicated thing, which is not understandable by many of us so easily. What is gross profit? And the client's gross profit is totally different than what insurance company gross profit. Insurance company gross profit means what is as per the policy. Policy defines gross profit in a different way, and insured's normal accounting practice defines it differently. What we say gross profit means, it is the amount by which the sales turnover exceeds the manufacturing cost. Simple definition. If the manufacturing cost is 70 crores for the entire plant in a year, and the sales turnover is 100 crores, in that situation, the simple thumb rule is your gross profit is 30 crores. 100 minus 70 is your 30. 30 crores is the gross profit, which I am supposed to insure. I am not supposed to insure your 100 crore sales turnover. If you ask me to take the policy for 100 crores, I'll say, sorry, I will insure your gross profit. How much is your gross profit? So you will give me these two figures. My sales turnover for the previous year was 100 crores. This year, it is likely to be increased to 150 crores. Fine, I'll accept that. What was your manufacturing cost? Manufacturing cost was 70 crores. This year, because of increased production, my manufacturing cost may go to 100 crores. So my likely estimated gross profit will be 150 minus 100. It will be 50 crores. I will be taking policy for 50 crores. This is the way of fixation of sum insured of loss of gross profit policy. Okay, just a minute. Connection is unstable. Yes, sir. Internet connection. So this is your sales turnover. This is the manufacturing cost, and the gap is gross profit. Any question on this? I think this is the most easiest thing on the word, but still people get confused. I'll tell you why. Any doubt in this? No. Go to another thing, opposite of that. What is gross loss? And I told you, no LOP policy can be given when it is a question of gross loss. Gross loss situation cannot be covered. Now, when the gross loss will come, when the manufacturing cost is more than the sales turnover. Your manufacturing cost is 100 crores and your sales turnover is 70 crores. That means your sales turnover is not sufficient to take care of your manufacturing cost. That means you are suffering gross loss. So there is no question of giving LOP policy under these circumstances. Got it? Your sales turnover is not sufficient to meet out the manufacturing cost. Your manufacturing cost is more. Many times it happens due to competition. You are unable to sell your product at the desired price. Yes, Ashok. What is your query? Quick. Yes, Ashok, you have raised your hand. Ashok? Achha. Anyway, Ashok is not listening. We go further. Another fundamental. Ashok, please put your hand down. So basic accounting concept. This you should know. The basics, otherwise loss computation cannot be done unless these fundamentals are clear, and there is no rocket science. Basic fundamentals. See, basically the sales turnover, it comprises of three things. It has got three parts. What is first part? First part is your manufacturing cost. We call it variable cost, which is normally 30 to 40%. The major portion is covered by fixed cost, standing charges, and the leftover is net profit, provided your sales turnover is sufficiently high. Not in every case you generate net profit, but this is the ideal situation of a business. It has got three components. Ideally, the business, if the business is running in a normal course, it should have three components. One is your manufacturing cost, another is your fixed cost, which is also known as standing charges, and the third component is net profit. Sum total of these three is your sales turnover. Now, based on this, your turnover is net profit plus fixed cost plus variable cost. Now, what is your gross profit? Gross profit is these two, addition of these two is your GP. Net profit plus standing charges is your gross profit. Or the other way to calculate gross profit is your sales turnover minus variable expenses. If you remove this blue portion, what you are left with? You are left with gross profit. So you reduce your manufacturing cost from the sales turnover, you get your gross profit. Simple. There should not be any confusion. Now we get two formulas for calculating gross profit. One is standing charges plus net profit. This is one formula. And this formula is known as addition method. There are two methods. And other formula is gross profit is equal to turnover minus variable cost. Turnover minus this blue portion. Variable cost. So the sales turnover minus blue portion is, what is that? This is your gross profit. So this is known as difference method. So always we say gross profit can be calculated by two methods. One is your addition method, another is your difference method. And in IR policy, always gross profit is calculated on difference method basis. This is 100% rule. Okay, there is one more way to calculate gross profit. And this formula is used when the unit is generating net loss. Okay, I'll explain what is net loss in my next slide. In that situation, your standing charges minus net loss is your gross profit. Abhi, just keep it aside. I'll explain. Now, first you understand what is net loss and what is net profit. Now, in earlier example, you calculated gross profit. How did you calculate gross profit? Turnover minus manufacturing cost is your gross profit. That means 100 minus 70, that was 30. 30 was your gross profit. Now, gross profit, out of gross profit, you will start paying for your standing charges, fixed expenses. Now, out of 70, if your standing charges are to the extent of 60, then the balance is your net profit. So 10 crores would be your net profit. So how will you arrive at net profit? GP is equal to sum total of these two. So net profit will be gross profit minus standing charges. Simple arithmetic. Net profit is how much? Gross profit minus standing charges. Okay. अरे किसी का माइक ऑन हो गया, म्यूट ऑल.
मेरा माइक ऑन हो गया.
हाँ जी. So hope it is clear. And from this standing charges, this formula comes, your gross profit is standing charges plus net profit. Gross profit is standing charges plus net profit. Any doubt on this? This looks confusing, but if you you understand the basics, there is nothing confusing. Any doubt on this formula? Gross profit is equal to standing charges plus net profit. It is addition method. How are we arriving at net profit? We are reducing standing charges from the gross profit. Then we are getting net profit. Now, opposite to that, like it happened in case of gross loss, if your fixed charges are higher than gross profit, you are earning gross profit is 70 and your fixed charges are 80, then instead of making net profit, you will incur net loss. So net loss is standing charges minus gross profit. That is your net loss. Or in that situation, the gross profit will be calculated how? Gross profit will be fixed charges, standing charges minus net loss. That will be gross profit. And in this situation, the client or the broker is always interested in taking the policy on standing charges alone. Why? Because he is interested. He is interested in covering his 100% standing charges. Whereas if you give gross profit, then his full standing charges will not be paid because he is incurring net loss. This is what has been prohibited by GIC. GIC says, no, standing charges alone cannot be covered. Any doubt on this? No. Good. Any query? Very good. People are understanding or not understanding. I don't know. At the end, I will come to know from your remarks.
Sir, one small question, because here net profit and net loss is what our terminology in insurance we are discussing right now.
Yeah.
But as per insured's terminology, net profit and net loss, there after in gross profit, so gross profit में से fixed charges के साथ साथ और बहुत सारे charges less होके फिर उसका net profit बनता है. लेकिन हम लोग उसकी बैलेंस शीट को नहीं देख रहे हैं यहाँ पर.
नहीं, हम उसके बैलेंस शीट को देखते हैं. वहां गड़बड़ क्या हो जाता है मैं बताऊं आपको. आई हैव सीन मैनी बैलेंस शीट, इंश्योर्ड बैलेंस शीट्स. Don't call it balance sheet, call it profit and loss account, because this net profit net loss comes from profit and loss account, not from balance sheet. Okay, books of account you can call it, not balance sheet. And they are duly certified by their chartered accountant also. And this problem comes when they apply for refund. As you know, there is a provision of 50% refund under LOP policy at the end of the year. That time, what happens? Clients, they compute net profit. They calculate what they do from the turnover. they go on reducing all expenses.
Yes.
Please understand, they will reduce your production charges, they will reduce your advertisement, and your standing charges, your office salary, your power, every damn thing they will keep on reducing. And ultimately, a net figure will come and they will say, this is my gross profit. Sorry, this is not your gross profit. If you reduce everything from the turnover, you reduce, like if you go to the previous slide, just a minute. I will show you. I'm unable to go to the previous slide. Back. Yeah, this figure. Now, if you, from the sales turnover, what clients they do, from the sales turnover, they reduce all their variable cost, they reduce all their fixed expenses, and they end up with net profit. And this is what they claim, my dear sir, this is my gross profit. And it is certified by the chartered accountant also. And as an insurer, we are not supposed to consider this because my sum insured is 100 crores. This net profit is hardly 40 crores or 10 crores or 15 crores. So I am not supposed to pay refund. I am supposed to compare what is your gross profit. So that is why the difference of opinion comes. What we say from the turnover, you reduce only the variable cost and give me this figure, sum total of net profit and standing charges. I will compare this figure with your sum insured and then I'll consider refund. And in many cases, I have seen that refund becomes zero. Reason being, client has demanded refund based on this net profit, whereas I am considering refund based on gross profit. When I am considering based on gross profit, I find there is no refund. The sum insured is even less. Your actual gross profit is higher than the sum insured. There is no refund. In many cases, because in my previous company, I tell you, in 90% of the cases, because I made it a point, any refund request will come to head office and it will be seen by me only. Because people were they were just seeing the stamp of chartered accountant. If the CA has approved, they will blindly give refund. No, sir. CA is certifying net profit as gross profit. I don't agree. This is your terminology. I'll not accept. I will say turnover minus variable expenses. That's all. And then I will see. I will not accept any reduction of fixed expenses. I will delete and I will recalculate. And this, I will means everybody, every insurance company official who is dealing with refund is supposed to work out refund in this manner. Calculate gross profit after deleting only the manufacturing expenses. If there are common expenses, ask for bifurcation. As I told you, semi-variable expenses. Then work out what is my actual gross profit which is coming. And then consider refund. If it is not payable, don't pay. Unnecessary, we are not supposed to pay refund just like that. Just because the chartered accountant has certified it, we are supposed to pay refund. No, sorry. Hope I have replied to your query.
Yes, sir. Thank you.
Good. Now, what should be the sum insured? Sum insured under the policy must represent the estimated annual gross profit duly adjusted as per business trend and indemnity period selected by the insured under the policy. Indemnity period plays a role and business trend. Trend means at what trend business is growing. In my example, I told you, say for example, last year, the client generated a turnover of 100 crores. This year, he says, I am likely to generate 150. Or if it is a rising trend, you can look at the financial accounts for last 3 years and you can work out the trend. Or otherwise, if the client is adamant, say, forget about my trend. I am growing at the rate of 10%, but forget this year, I am definitely going to grow by 50% because of my fresh orders, because of my improvement in my plant and machinery. because of my purchase of new sophisticated machinery, which has got a higher production capacity, because of development of new product, which is not there in the market, because of development of new vaccine, which is very much in demand. So I'm going to generate double of my turnover this year. We will have to accept. You can't deny. You cannot say, no, sir, you are increasing just by 10%. So I will not agree for more than 10%. Sorry. You can't object. This is sum insured has to be decided by the insured and you have to honor it. You can't question how you are taking sum insured of 200 crores. Sorry, you can't. He is ready to pay premium and he has got his own estimates. We have to honor it. Okay. Now, this is and based on indemnity period. Indemnity period, these are the two things which every time in my class I advise my participants, my students, that don't poke your nose. You can suggest, but don't give authoritatively that, no, sir, you should not take more than 6 months indemnity period. Who the hell you are? You should not. If the client is demanding 12 months, you can just give your opinion, my dear sir, I think 12 months is little higher or lower, but ultimately it is client's choice. If he says, no, I want 18 months indemnity period, fine, you have to honor it. Okay, same is the case with estimated annual gross profit. Okay, now if the gross profit is not correctly calculated, you can guide. Now there are two methods. One is addition method, another is your difference method. Now suppose he is trying to insure only standing charges alone. Sorry, you must object. You say, my dear sir, I am going to calculate your gross profit. Whether you insure standing charges alone, fine, but I will not accept it as standing charges alone. I will say whatever figure you are declaring, it is the gross profit you are declaring. And accordingly, I will be settling your claim. Okay. Now, regarding this GIC treaty, as per the latest treaty, now this somebody was talking about this. What GIC says, no reduction in premium to be allowed if the indemnity period is less than 12 months. What does it mean? Your premium will remain same, even if the indemnity period is less than 12 months. So there is no point in going for 3 months IP, 6 months IP, 9 months IP, because premium wise, you are not going to save anything. So what I suggest to my clients, to the brokers, to everybody, that there is no point in reducing your IP. Even if you require 6 months, better go for 12, because ultimately you are going to pay 12 months premium as per GIC guidelines. But what? Here, one thing I forgot, I think there is another slide. If the indemnity period is more than 12 months, then sum insured will be increased proportionately. I think that some other slide, on some other slide I might have covered, but still I am repeating. So indemnity period less than 12 months, no reduction in sum insured. Sum insured has to be annual gross profit. But if it is 18 months, then sum insured will be increased proportionately. That means it will be 1.5 times. If your annual GP is 1000 crores, for 18 months GP, it will be 1500 crores. For 24 months IP, it will be 2000 crores. So you will be charging premium on 2000 crores. If your annual gross profit is 1000, indemnity period is 24 months, then you will be charging premium on 2000 crores. If the indemnity period is 30 months, that means 2.5 times. That means 2500 crores will be my BI sum insured for 30 months IP. Okay. Any confusion on this? Please.
Sir, if we remove that GIC exclusion directives, was it possible for us to reduce the sum insured if IP is month? So is it possible as per tariff wording to take a sum insured of 50 crores?
No, acha, suppose you are not following, you mean to say, you say forget about GIC guidelines. That means you don't want GIC RI protection. your reinsurer is somebody else. It's okay.
Yeah.
In that case, you are supposed to apply your old tariff guidelines. Old tariff guideline again says that even if the indemnity period is less than 12 months, annual GP should not be reduced. Your sum insured will be annual GP. The only benefit was some reduction in premium rate was allowed in old tariff regime. But sum insured was supposed to be annual GP, even if the indemnity period was 9 months or 6 months or 3 months. The same formula will apply right now. Sum insured, there is no reduction. The only thing was there was some provision of reduction in premium rate, which GIC has withdrawn. No reduction in premium rate. Sum insured will also be annual gross profit, even if the indemnity period is lower than 12 months. Is that fine?
Okay, sir. Okay.
Good.
So that's a ruling. There is no logic. That is the ruling given in the tariff.
हाँ, लॉजिक नहीं है वो बॉस GIC ने अपना बना दिया. These are my norms. If you like it, take it. Otherwise, go to any reinsurer. अगर वो आधा 50% करने को तैयार है, take that policy, and there is no objection. If Hanover Re or Swiss Re or Munich Re, they are ready to reduce the sum insured for 6 months indemnity period to half, it's okay. GIC has no objection. You can take the policy. But nobody is a fool. No reinsurer in the world is going to reduce your sum insured in this way. For the purpose of your PML calculation, you can of course take 50% if your indemnity period is 6 months. For the purpose of calculating PML, you can make it half, but not for charging the premium. It has to be 100%. Everybody follows that. So far as I have come across, no reinsurance company, reinsurer has agreed for reduction in sum insured. They all are charging on annual gross profit, because loss computation is also done on annual GP. That is the logic. It is not done on 50% of the GP. Calculation of loss is done based on annual GP, even if the indemnity period is 2 months. Loss calculation is done based on annual gross profit. Okay.
Noted, sir. Thank you.
Now, how to calculate annual GP? There are 2 methods. I have already explained. Addition method. Standing charges alone cannot be covered. It is just a repetition. And the second is your difference method. Difference method says your turnover plus closing stock. Here the closing stock is also added. Why it is added? Please understand, in insurance accounting, anything which is produced is considered the turnover, whether it is sold or not, because the raw material, input cost, everything has been added, has been incurred. So it is as good as sold. So if the client has sold 50 crores worth and 25 crores is a closing stock, while calculating gross profit, you will have to add the closing stock also. So turnover plus closing stock minus variable cost, that is manufacturing expenses, plus opening stock. Opening stock is again to be reduced because this much stock was already lying at the start of the policy period. So this becomes the formula. So in short, we say turnover minus variable expenses, but when we actually calculate the gross profit, we apply closing stock and opening stock. So turnover plus closing stock minus variable expenses plus opening stock. Okay, this is the formula, and this difference method is applied in IAR policy. IAR policy, always sum insured is considered on difference method basis, not on addition method. Now, why this looks simple, but reason being, there is a possibility of missing out some of the standing charges which are there, but client may miss out. So just to avoid that possibility, difference method, there is no possibility of missing out anything. Ideally, If you take 100% standing charges, then the net result, the GP, by way of addition method or difference method, it should come same. There should not be any gap. But in case you miss out some of these standing charges, then your GP will become lower, which is unwarranted. Okay. Now, rules for premium calculation. Now, I am talking to latest norms of calculating BI premium as per GIC guidelines. Again, it is applicable. These rules are applicable only if you are following GIC treaty. If you are taking RI support other than GIC, you may not follow these rules. Okay. Now, what it says, LOP rate is 100% of your basic material damage rate. Basic material damage rate is minimum fluxa rate, which is defined by GIC, plus minimum STFI, plus minimum EQ. And this rate becomes 100% BI rate. No loading. Earlier, there was a loading of continuous plant, non-continuous plant. Continuous plant, there was a 25% loading. BI loading was 25%. So 25% and then 25% loading, all these complications, they have been removed. Now GIC says whether the plant is continuous, non-continuous, plain plant, complicated plant, whatever it is, you simply charge 100% of material damage rate, irrespective of indemnity period. If irrespective in the sense, if it is lower than 100%, 12 months, no reduction, and rate remains same. So irrespective of indemnity period, there is no change in rate. The only thing is sum insured is increased if the indemnity period is more than 12 months. Now for premium calculation, yes, the same thing has come, which I was explaining in that slide. Below 12 months, annual GP, no reduction in GP. Above 12 months, annual GP is to be increased proportionately. 18 months, 1.5 times, 2 times, 2.5 times, 3 times. For 36 months, it is 3 times of annual GP. This is the way premium is to be calculated. Rate is fixed. Any doubt on this slide? No. Good. That means people are understanding. Uday Kumar, boliye sir.
Sir, if the insured is opting for less than 12 months indemnity period, then what is their benefit? Instead, they can able to take 12 months indemnity period.
Boss, आपने सुनी नहीं मेरी बात. नहीं, एक minute. You have not listened. I told the same thing. As on date, there is no point in going for less than 12 months indemnity period. ये मैंने बोला है. I think you missed my statement. I myself told. As on date, if you are following GIC guidelines, there is no reason the client should go for less than 12 months indemnity period.
ठीक है सर.
Okay? क्योंकि उसको रेट बेनिफिट नहीं मिलने वाला, कोई फायदा नहीं है. तो 12 महीने लो ना. जब कोई प्रीमियम बेनिफिट नहीं मिल रहा है, टेक 12 months. Okay?
Right.
Good. अच्छा.
Sir, hello.
हाँ, बोलिए.
I have two questions. One on the previous slide on the rate. So let's say for an steel industry, the reinstatement period, the minimum reinstatement period is 36 months, yeah? And the client is opting for 12 months indemnity period to save some money. And they are considering only the partial loss scenarios. In that case, are we going to charge the normal rate for 12 months? Because the exposure on the insurance companies are higher in the event of a partial loss.
Good question. Good question. So we are going to charge based on the indemnity period selected by the client. Irrespective of exposure. Exposure is high because in case of total loss, what is the benefit of insurance company? Suppose there is a total loss, insurance company would be saved of paying 3 years loss. Instead of 3 years loss, they will get rid by paying 12 months loss. So the client is at a higher risk. Client will have to suffer. In case the indemnity period, your interruption period is more than 12 months, company is not going to pay more than 12 months if he has selected for 12 months. That is why company is least bothered. Nowhere it is defined that steel plant will take 36 months or 24 months. Minimum period is, okay, in case the complete plant is destroyed, okay, then it may take 3 months also, but that possibility is very, very low. It is the decision of the client. We don't have to bother about that.
But in the event of a partial loss, the insurance company's exposure will be higher, right?
In that case, company will pay up to the 12 months period. In case of partial loss, yes, there is no question of exposure because the plant is ready in 6 months. Company is going to pay you 6 months because indemnity selected is 12 months.
So my question is, for shorter indemnity period, we won't charge a higher rate.
We don't charge a higher rate. Yeah. Shorter means shorter than 12 months, or shorter means what? Shorter than 36 months.
Shorter than 36 months.
The shorter than 36 months is not a parameter, my dear. It is the choice. He can go for 15 months indemnity period. We are going to charge for 15 months. Accordingly, the sum insured will be increased. Higher the indemnity period, sum insured will increase. Accordingly, the premium will increase.
Okay, so let's say GIC is removing the restriction of 12 months, the minimum indemnity period. So in that case, the logic of normal insurance. So if the client is opting for a 3 months or 6 months, in that case, the rate would be higher, right?
No, not rate would be higher. In that case, the client would expect a reduction in premium. He will say, my dear sir, I am limiting my liability only for 3 months. Why should you charge higher rate? You are going just a reverse, opposite to that theory. I am opting only for 3 months indemnity period, and you say my rate is higher. Sorry, I should get a discount. And in earlier tariff days, yes, for 3 months indemnity period, there was a reduction in premium rate. Because the client is limiting your exposure. In any worse situation, your exposure is limited to 3 months. Why not you should give discount in premium rate? You should.
It was a lot till 2018.
Exactly. But now GIC has stopped this benefit because of lowering of rates, and they have removed all those loading provisions. Earlier, as per LOP tariff, there was a provision of 25% loading, normal loading. Then if it is a continuous plant, there was a list of continuous plant like sugar mill, paper mill, all these things. They were continuous operations. So there was a big list. And in that case, there was another subsequent loading of 25%. GIC has simplified it. Okay, no reduction and no rate will remain same irrespective of indemnity period. Whether it is lower than in 12 months or it is higher than 12 months, the only thing is higher than 12 months, premium rate will remain same. The only thing, sum insured would be increased proportionately. The client will have to shell out higher premium. Higher the indemnity period, higher the premium. The one. Now, important terms to understand. What is written? It is hidden in my case. Important terms to understand. Yes. What are the important terms? Please understand. Financial year turnover. You should know basic terminology. Then only you will understand the fundamentals. Okay. So financial year turnover is turnover generated in a year of 12 months. In a financial year, complete financial year, whatever money is sold out, recovered by selling the goods, that is financial year turnover. Then rate of gross profit. Why I am explaining these terms? Because otherwise you will not be able to understand how under insurance is applied, how other things are calculated. So these are the basic 3 terms. One is financial year turnover, very easy. If the financial year of the company is from 1st April to 31st March. So financial year, in the previous financial year, how much money he has recovered by selling the goods. That is the financial year turnover. Another is rate of gross profit. how much gross profit he has earned. Okay, for the entire financial year turnover. The formula is gross profit generated divided by financial year turnover. This is rate of gross profit, and this is calculated in terms of percentage. So you multiply it by 100, it gives you the percentage. Say, for example, financial year turnover was 100 crores, gross profit was 20 crores. So your rate of gross profit becomes 20%. Okay, simple. There is no rocket science in that. And the third is annual turnover. Annual turnover is important. Turnover during the 12 months immediately before the date of loss. So you go 12 months back and find out how much goods were sold in 12 months period immediately before the date of loss. In the next slide, you will see the diagram and you will understand it better. So annual turnover is not the financial year turnover. It is annual turnover means 12 months turnover, but it is immediately before date of loss. Okay. So annual turnover, rate of gross profit, and financial year turnover. These things, any doubt in this? I think it is very simple. Okay. Now in the next slide, you will understand. Yes. From this slide, you will understand the basic concept. Okay. Now, what is the financial year turnover? Very simple. If the policy period is from 1st April 2019 till 31st March 20. So whatever is the turnover generated by the company, turnover means sales turnover, माल कितने का बेचा वो है, that is the financial year turnover. So this period turnover is financial year turnover. Okay. And this is the date of loss. This is the date of recovery, 31st October. Indemnity period or interruption period is 4 months. Now, from date of loss, you go 12 months back. So from 1st July, if you go 12 months, 1st July 2019 till 1st July 2020, this period, whatever sales turnover is generated, it is annual turnover. Okay. And there is one more term, standard turnover. Standard turnover is the turnover generated during the same period in the previous financial year. So the interruption period is 4 months, 1st July to 31st October. You go in the previous financial year in the same period, 1st July to 31st October, and you find out how much turnover was generated in the previous financial year. That is your standard turnover. So there are 3 turnover: financial year turnover, annual turnover, and standard turnover. 3 things. Now, if the gross profit earned is 65 crores and financial year turnover is 650, so rate of gross profit, simple 10%. 65 by 650 is equal to 10%. This is what I explained. Any doubt in this diagram? I think standard turnover is clear to everybody. What is standard turnover? Standard turnover is the turnover generated during the period of loss in the previous financial year. This is one financial year. This is the previous financial year. In the previous financial year, you try to find out, the surveyor is supposed to find out how much turnover is generated. That is your standard turnover. Now, midterm increase in sum insured. Midterm increase. Suppose somebody wants to increase the sum insured during the policy period. Of course, it is allowed, but it is not pro rata. Like material damage policy, it is done on pro rata basis. It is done at short period scale. Okay, from the date of loss, from the date of increase till expiry of the policy. Now, there is one example you will understand. If the policy sum insured is 15 lakhs, insured makes a request for midterm increase in sum insured for 5 lakhs after 5 months. So additional premium to be charged for 7 months because 5 months have already passed. So what additional premium you are supposed to charge? That is what is to be calculated. And if the premium rate is 2.5 per mille per thousand is the premium rate. So existing sum insured is 15. He wants to make it 20. So what is the increase? 5 lakhs. 5 lakhs for 7 months because 5 months have already passed. Remaining period is 7 months. For 7 months, short period premium is to be charged on this amount, 5 lakhs. Okay, how to calculate? Short period premium for 7 months to be charged on 5 lakhs. This is what I have already told. So 5 lakhs multiplied by rate. This is the annual premium. Now for 7 months, the premium has to be 75% as per short period scale. It is given in tariff. The same tariff scale is applicable. So the premium, additional premium comes to 938 rupees. This is just an example. Any doubt in this? So we proceed further. Please raise your doubt. Any question in understanding this? No. Very good. Am I audible to all?
Yes.
Very good.
Yes.
So no question. It means clarity is there in this example. Very good. Now, this is another condition. This is a relaxation given to the client. If the policy is renewed for a further period of 12 months, okay, for not less than this existing sum insured, the difference between short period and pro rata shall be adjusted. This is a relaxation given in the tariff. Say, for example, now this 938 has been taken. Now, if the policy is further continued for increased sum insured of 20 lakhs or more for further period of 12 months, then this difference of pro rata and 75%, and say, for example, for 7 months, if it is, it will definitely be lesser than 75%. No? So that adjustment can be done in renewal premium. This provision is very much there. So here in this case, 938 is the short period scale and 729 is calculated pro rata premium for 7 months. So this gap is 209. So 209 will be adjusted in renewal premium. Understand? This 729 is pro rata premium. 938 is short period premium. So the gap is 209. This will be adjusted in renewal policy. Okay. Now trends and adjustment clause. This I told you I'll be explaining. This is a very important clause. Without this, no LOP claim can be settled by any of the surveyor. This is very, very important clause. And every LOP surveyor has to understand it properly. He will have to review the business. He will have to go deep into the market situation, conditions, future prospects, the product requirement, market requirement. All these parameters has to be taken into consideration to make certain adjustments as per this particular clause. This is a fundamental thing. And this clause is not supposed to be taken just like any add-on cover. It is built in. It is the right of the insured. So surveyor cannot say, sir, show me where trends and adjustment clause is attached to your policy. Sorry, it is nothing is required. You are supposed to apply trends and adjustment clause while computing the loss. What it says, while computing the figures of standard turnover, annual turnover, and rate of gross profit, these 3 parameters which I have explained, these are required for calculation of loss. Okay. Now, these are to be adjusted based on various parameters, special circumstances. We also call it Trends, Adjustment and Special Circumstances Clause. The full name is that. So applying those things, these figures have to be adjusted. This is not to be taken just like that. Say, for example, standard turnover is previous year figure. Say it is 15 crores. It does not mean you are going to compute the loss based on 15 crores only. Sorry, you have to adjust it based on circumstances. Change circumstances. It can be positive, it can be negative also. Last year you performed very well, so your standard turnover was 15 crores, but this time there are no orders. You are going down. So surveyor is going to apply a negative trend in your standard turnover, and we will compute the loss accordingly. So not that every time the client is going to be benefited. That is why this trend and adjustment and special circumstances clause is a must. It is a part and parcel of BI policy. Same thing is applicable on rate of gross profit. Same thing on annual turnover. It is all things has to be adjusted. What it says, adjustment has to be made for the trends of the business or special circumstances which affect the business, so that the adjusted figures so arrived represent the true value as nearly as practicably possible, so that the loss computation is as real as possible, because it is based on estimations. Understand? Still, there can be a gap. There can be a disagreement between surveyor and the client. 100% they can never arrive at a same figure, but the intention is to arrive at a figure which is as practicably possible, as represent the true value as nearly as practicably possible. जितना ज्यादा हो सकता है उतना हकीकत के करीब पहुंचना, हिंदी में सिंपल टर्म्स में. Okay. Now average clause, that means under insurance clause. This is very important, and that is why to understand this, okay, 3 participants raised hand. Boliye sir.
Sir, can you repeat to previous slides because of internet connectivity not able to connect, sir?
हाँ, अब आपका connectivity आ गया?
Yes, sir. Due to heavy rains, there's certain problem is going on.
Acha, no problem. So what I said, that while calculating the figures for the purpose of calculation of claim, these 3 parameters have to be adjusted based on the special circumstances, trend of the business or special circumstances which affect the business, so that loss is calculated as nearly as practicably possible. Estimation कर रहे हैं आप ultimately. You are making an estimation. So estimation में हो सकता है sometimes error. So to avoid, minimize that gap, you are supposed to apply these, adjust these figures based on the special circumstances. अब इसके example क्या हैं? For example मैं बताऊं. Last year you did not have enough orders, but this year you are having wonderful orders because of development of new product, because of increased demand in the market for that particular thing, especially in pharmaceutical company, those who are into vaccination business. You see their business has a tremendous increase. Now, if you apply the last year figure, they will not be adequately, it will not be justified to adjust the loss accordingly based on last year figure, because necessary adjustment has to be done. This year, everybody knows there's a huge demand of vaccine. Same is the case with any other product, any other chemical industry, any other paper industry. It can apply to any industry. Okay. And it can go positive, it can go negative also. Okay. So these 3 parameters have to be adjusted, positive or negative, depending upon the circumstances, for computation of loss, which is supposed to be correctly done. Does it reply to your query?
Thank you, sir.
Good. So there were 3 hands. So all 3 hands are satisfied? Or somebody is left? 2 participants still. Yes. What is your query?
Sir, in view of the current pandemic situation, yeah, a lot of companies are not working. Let's say cinema house. So last 2 years or last 1.5 years, they are not open. So when they open, let's say there is a fire loss, and they are only giving the estimate figure for the BI. And in the event of a claim, how the trend adjustment will be made?
Yeah. So in that situation, that is why adjustment clause is a must in the policy, because last year, due to pandemic situation, they were not operating at all, or they were operating hardly at 10% capacity or efficiency, or 20% capacity. But this year, since the pandemic situation is coming under control, and theaters are opening, your shopping malls are opening, business is coming back to normal situation. So in that case, you will have to apply increasing trend. You cannot settle the loss based on expiring year figure. You will have to adjust. You will have to make adjustments, provided your adequacy of sum insured is there, provided insured has declared the sum insured adequately, considering these factors into the mind. Otherwise, insured will suffer. Suppose he has taken a sum insured of 50 crores only, annual gross profit. But whereas the computation, as per the computation, in 6 months, he has lost a business of 150 crores. In that case, surveyor can't do anything, because sum insured is the upper limit. If the sum insured is adequately taken, considering all these parameters, in that case, higher amount of loss can be paid.
So the client, can they choose or can they opt to take policy on net profit plus standing charges?
Of course, if it is not a IR policy. Under IR policy, the policy has to be taken on difference method basis. Difference method means turnover minus manufacturing expenses, and whether he takes addition method or difference method, the sum total, the gross profit figure is supposed to come same. So how does it matter that whether he is taking this policy on net profit plus standing charges basis or difference method basis? It does not make any difference. It is good for the client that he takes the policy on difference method, so that the possibility of error is zero.
Understood.
Understood? Good. Any other query? No. Good. So we proceed further. So average clause. Average clause is very important. It means, average clause means what? If the sum insured is not adequate, is not found adequate at the time of loss, then underinsurance will apply. Like any other policy, here also the underinsurance is applicable if the sum insured is not adequately declared. Understand? But the way of application is totally different. It is 100% different than your material damage policy. How? Please see. So this is the fundamental. What it says, if the sum insured, estimated sum insured of the policy is lower than the sum required to be insured. This is very, very important. Nowhere it says that sum insured is to be compared with actual gross profit at the end of the policy. No, sir. The easiest way is what? You wait for the completion of a financial year. And if the sum insured was 100 crores, at the end of the year, he has generated 150 crores. Apply under insurance 100 by 150? No, sir. It is not to be done like that. Because claim can happen within the very first month. So in that case, insured is not supposed to wait for 12 months for settlement of the policy. And that is not a logic, because it is all estimated. So what formula says, what is required, if it is lower than sum required to be insured, and how it is to be calculated? Required to be insured, and this is the factor, sum insured, under insurance factor is sum insured divided by sum required to be insured. And required to be insured is to be calculated theoretically. How? Rate of gross profit multiplied by annual turnover multiplied by indemnity period in terms of years. What do you mean years? Not in months. If it is 18 months, you will be taking as 1.5. If it is 24 months, you will be taking at 2. So this indemnity period multiplier is to be taken into consideration to compute sum required to be insured. So this is the formula to calculate underinsurance. Sum insured, you know, sum required to be underinsured, required to be insured, what he was supposed to insure. This you can calculate based on this formula. This is what he is supposed to declare. And then based on this, you apply this, then loss payable is admissible loss. If it is 150 crores, apply this underinsurance factor, whatever it is coming, some this parameter, this fraction, and then you pay the loss. Okay. Any question on this?
So this rate of gross profit is to be calculated on which date, sir?
On the rate of gross profit is not on a particular date. It is the gross profit divided by financial year turnover, as per the previous slides I have already shown.
Right,
and
right,
then
right.
it is to be duly adjusted. By applying the trends and adjustment clause. It is a complicated exercise. It is not that easy. That is why not everybody can assess the loss correctly. There are specialized surveyors. There are specialized chartered accountants. Many chartered accountants, they are there in this particular field. They are designated as business interruption calculators. They are the authorized persons who calculate the business interruption loss. Otherwise, everybody cannot do it, because a lot of things are to be taken into consideration for computation of loss. Understand?
Yes, sir. Thank you.
Acha, now comes increased cost of working. Somebody was asking about increased cost of working. I told him to wait. Now here is the right time. Okay, please hear it. Bear with me. And even then, if there is any query, please raise your query. Understand? So increased cost of working is not, again, it is not an add-on cover. Again, people, they get confused. They think that it is something like add-on cover. No, sir. It is built in. It is a part and partial of your BI policy. Okay, ICOW. What it says, it is the expenditure, additional amount, which is reasonably and necessarily incurred with the sole intentions to avoid or minimize reduction in turnover. What does it mean? In simple terms, if you see in a normal period, if you think your repairs of machinery is going to take 2 months, 60 days. So in order to minimize this period of 60 months, if you pay something additional so that this 60 month becomes 30 months or 45 months, in that case, this additional expenditure can be reimbursed, can be paid as increased cost of working. This is the basic concept of increased cost of working. But this is limited to economy limit. There is a economy limit, and this is very important. Many times clients, they incur with these clear intentions of saving LOP loss, because company is being benefited. They reduce the indemnity period by incurring genuinely, but ultimately they are trapped here. Economy limit is to be calculated, and this you cannot calculate in advance. This is just a gamble. Later on, surveyor will calculate by incurring 10 lakhs, how much you have saved. Loss of gross profit thereby avoided. If you have incurred 10 lakhs rupees and you have saved only 5 lakhs, then sorry, this 5 lakhs becomes economy limit. Company will not pay more than 5 lakhs, even though you have incurred 10 lakhs. Understand? And how do you calculate an economy limit? It is not a discretion, just a haphazard thing. The surveyor will decide. No, sir. Everything is in black and white. Economy limit is to be decided. Loss of GP saved, how much he has saved. And how? What is the formula? Formula is reduction in turnover avoided multiplied by rate of gross profit. By way of incurring 10 lakhs, 15 lakhs, 20 lakhs, 5 crores, 10 crores, how much reduction in turnover he has avoided, multiplied by rate of gross profit. This, by applying this formula, this economy limit is calculated. In one of the cases, I remember the company incurred amount of 8 crores. It was a petrochemical plant, and they incurred 8 crores rupees as increased cost of working. But unfortunately, they were paid 2 crores only, because finally the surveyor calculated, had you not incurred 8 crores, the company would have paid only 2 crores extra as a loss. So what you have saved? Only 2 crores. So remaining 6 crores is not payable. Understand? So this is something very tricky, but it has to be taken into consideration. If you incur an increased cost of working, again, your due diligence clause forces you to reduce the loss. You cannot simply say, my dear sir, I don't know what is my economy limit, so I am not supposed to incur any amount or try for reduction in loss. By way of due diligence clause, you are supposed to take all measures which you can take to minimize BI loss. This is what is the expectations on the insured. Due diligence. Understand? So this is the example I have already told. If by incurring 10 lakhs, insured avoids a loss of rupees 15 lakhs, he will be paid full 10, but he avoids 5, then he will be getting 5 only. Any doubt on this? Any doubt? Yes, 2 participants. Boliye.
So on this one, if the client is taking an additional increased cost of working,
I'll come to that. Again, you are jumping.
Okay.
My dear sir, you you know the subject, and that is why you are jumping.
Understood.
It is not the end of this session. I'll come to that. It's a part of my presentation. Okay. और कोई बाकी रहा उदय कुमार के अलावा? Otherwise, please. So that is a different issue. I'll explain that. Examples of increased cost of working. These are the ways you can incur to minimize the BI loss. These are the various examples. You can give bonus payment to the contractor for early completion of building repairs, for quick delivery of new machineries, additional cost to the competent contractor other than lowest tenderer. You are getting a lowest tender, but you know he is not competent. So you are paying 5 lakhs rupees extra to a competent contractor who has quoted 5 lakhs extra. So this 5 lakhs extra will be taken into consideration, provided your competent contractor is in a position to complete the work much earlier than what was expected. Okay. Of course, it is very, very subjective, very difficult to find out whether how much he would have taken and how much money he has saved. This is all estimations. Okay. Then additional payment to machinery supplier for giving priority. This is done many times because suppose you apply for machinery and he is booked completely. He says, sir, your machinery can be supplied only after 6 months. Now you say you have got ready-made machinery for other suppliers. Okay, I am paying you 10 lakhs rupees extra. You give me this machine on priority. And if the supplier agrees, this 10 lakhs rupees will be considered as increased cost of working. Hiring of generator. This is very, very common. In majority of the cases, it is done. DG set is hired on rent, and that rental charges, they are payable because transformer is under damage. You are facing electricity shortage. So in order to overcome, resume your production, you are taking generator on hire, and that cost is paid. Now, additional cost in buying alternate equipments more readily available than the destroyed in accident. Now, the same type of machinery is not readily available, but alternate, which can do the work, same work, is available at slightly higher cost. So that difference in cost can be claimed as increased cost of working. Because you are minimizing this, you are getting it right now, and a cheaper machinery you will get after 6 months. So which is better? It is better to pay 5 lakhs rupees more for the alternate equipment. Additional overtime payment to outside contractor or to own staff for speedy resumption of production activity. You pay additional payment. Overtime, some bonus you give to the workers. Nighttime work, extra. So this is all increased cost of working. The idea is to get the work done earlier than the scheduled restart. Okay, so with the intention of saving loss of gross profit for the company. If you reduce the interruption period, ultimately you are saving loss of GP to the claim, to the company. So that is why company will gladly pay these additional expenses, provided they are reasonably spent. That is very important. Reasonable means instead of, say for example, the rent for a DG set, 5 kilowatt DG set is required. Instead of 5, you hire a DG set of 50 kV. Then in that case, rent is also more. Surveyor will not agree. They say your requirement is 5 kV or 10 kV. So why did you hire the higher one? Then in that case, the additional rent will not be paid. So it means the amount was not incurred reasonably. Now last, comes your policy access. The business policy carry a compulsory time access, minimum 7 days. Okay, this is the minimum. Earlier it was nil, but now at least, thank God, thanks to GIC. Earlier, initially it was nil, then it came to 3 days, but now it is 7 days. Minimum 7 days of standard gross profit. Intention is to avoid small claims, and policy access is to be calculated 7 multiplied by adjusted standard gross turnover divided by indemnity. This is a complicated formula. Multiplied by rate of GP. So here is the example. If the previous year standard turnover is 10 crores, growth is 10%, rate of GP is 15%, IP is 90 days. So this is the way it has to be calculated. 7 multiplied by 10 plus 10%. You are taking adjusted 10% growth, 11. Divided by 90. Why you are dividing by 90? Because you want to calculate per day standard gross profit. So interruption period is 90 days. So divide by 90, it comes to per day, multiplied by 15. The excess amount comes to 12,83,833. Any question? Earlier, the time access was only 7 days, but now we write 7 days of standard gross profit. Because there was a lot of ambiguity. 7 days means what? Initial 7 days, middle 7 days, last 7 days. So all these complications have gone. Now we simply say 7 days of standard gross profit, and this is to be calculated, and this is deducted from the assessed loss. Now policy specification. Basis of giving the policy, turnover basis, which is widely used, where the calculation is done based on turnover, like your financial year turnover, standard turnover, your rate of turnover, your annual turnover. So turnover basis policy is given and calculation is done based on these parameters. Another is your output basis. Output means where the production is taken into consideration. Here the sales revenue is taken into consideration. Here output means your production. Here the policy is given in terms of metric tons instead of money. So your consideration would be your not financial year turnover. It will be financial year output, annual output. Okay, standard output. This is the way computation of loss shall be done. Third is your difference basis. Difference basis means calculation of gross profit has to be done on difference method basis. Another is revenue basis. This is done in service industries. Okay, where manufacturing expenses or the working expenses are bare minimum. They are not zero. It cannot be zero. It has to be something, but they are very nominal. In that case, your revenue basis policy specification can be given based on revenue basis, gross revenue. And the last one is your throughput basis. It is applied in case of petrochemical refineries. So here throughput means how much crude oil has been processed by the particular refinery in a year. So the unit is multi-million tons per annum, MMTPA. This is the way the refinery capacity is decided. 20 MMTPA, 30 MMTPA, million metric ton per annum. Okay. So if the refinery capacity is 50 MMTPA, it means it's a big refinery. Okay. So based on that, you decide your calculations. They don't calculate based on the output. How much they have sold, they are least concerned. Whether sold or closing the stock, nothing doing. What they check, loss is calculated based on how much crude they have processed. Last year, what was the processing of crude? What was the throughput? So standard throughput, annual throughput, and your financial year throughput. Financial year throughput means in the last 12 months, financial year, how much multi-million, million metric ton. Say, for example, 20 MMTPA crude was processed. And this year, annual throughput is your 25. So that means there is a gain of 5 MMTPA, million metric ton. And this is applicable for petrochemical refineries where crude is processed. Okay. Any question on this policy specifications? I think we have to go quickly because a lot of slides are still important extensions. Contingent BI. Should I continue? Or people are feeling bored?
So continue.
Continue, sir.
Huh?
Continue, sir. Continue.
Continue. No, I don't mind continuing because these are the important extensions. Okay. So contingent BI. So CBI, we call it contingent BI. That means contingent BI. Here, what is the difference between BI and contingent BI? The difference is material damage proviso does not apply here in contingent BI. CBI extension means there is no MD proviso. Even if there is no material damage loss within the plant premises, still if you suffer interruption, the loss will be paid. This is contingent BI. And it has got 3 parts that I'll show you later on. First, you understand the same thing which I have explained in writing. It refers to your BI loss due to interruption arising out of damage of property located outside the plant premises. So MD proviso is not followed. What MD proviso says, inside the plant, there should be a material damage loss. Here, if the property loss has taken place outside the plant premises, then again, business interruption can be paid. Okay. That means insured may recover production loss even though there is no material damage in his premises. Waiver of MD proviso. There are 3: supplier premises extension, customer premises extension, and failure of utility extension. Utility means electricity, gas, and power. These are the 3 utilities. Now let us see one by one. Supplier's premises extension. Here, if you see the diagram, you will understand it better because it will take a lot of time to read. You can go through it. I'll be sharing this presentation to all of you. So you can go through these wordings later on. First of all, let us understand the fundamental. This slide is important because it talks of limits. As per GIC guidelines, what we cover, it is permitted to extend coverage only to first year. First year means direct supplier. No coverage for second or third tier supplier is available. Okay. And this is again inland supplier, not foreign supplier. For inland first year supplier, the limit is 20%. This GIC has given this restriction. Earlier, we were giving up to full sum insured, but now GIC has restricted. They say our limit, loss limit is 20% of PI sum insured. And that too, Fluxa and AOG peril. For foreign supplier or unnamed supplier, the limit is reduced to 10%. And the coverage is restricted to Fluxa only, no AOG peril. No AOG peril is covered in case of unnamed supplier or foreign named supplier. And for unnamed foreign supplier, no cover. These three restrictions are there. Very important. Okay. Now this diagram I was talking. Now here is the insured premises. He is taking supplies from here. Now if there is this supplier is taking supplies from another supplier. Now say for example, this is Maruti Udyog. They are taking bonnet assembly from this Faridabad supplier. And this Faridabad supplier is taking some of the parts of bonnet assembly from Ghaziabad supplier. Okay. In that case, if there is a damage to Ghaziabad supplier, there will be no supply here. And again, no supply here, and there can be a production loss in insured premises. Understand? Practically, it does not happen because they have got multiple suppliers. If one supplier fails, they can start taking supplies from other companies. No company is dependent 100% on one supplier. But theoretically, if they are dependent on one supplier, in small cases, it happens. In case of automobile industry, big plants, it does not happen. They are not dependent on one supplier. But if it happens, then in that case, BI loss can be paid here. Although there is no damage to the plant and machinery in insured premises, still BI can be paid. Why? Because there is a damage to first year supplier. And this BI is restricted only to first year supplier. If there is a damage here, then again no BI is payable. So second tier supplier is not covered. First tier supplier, that means direct supplier. If there is a physical damage to the property, okay, by a peril which is covered under insured policy, this is another condition. The peril has to be covered. If there is no earthquake covered here and there's an earthquake loss, due to that, the supplies are disrupted and they suffer BI, no BI claim can be paid. This is another important parameter. Okay. Any question on customer supplier? Good. Let us proceed. Now, customer premises ruling is same. GIC rules are same.
Sir, sorry to interrupt in between. So will you going to share this all slide after this session?
Of course, I'll share this presentation to all of you.
Because due to heavy rains, I'm facing a lot of
No problem. No problem. This presentation, you will get it. Okay.
Okay.
So this customer premises extension, GIC rules are same. 20% limit, 10% limit, unnamed foreign cover, no cover, customer, same rule, just like your supplier premises. And here is the, again, now the diagram, insured is sitting here because he is at the supplying end. Now he is supplying. Now, say for example, he becomes a bonnet supplier. Same example, the supplier of bonnet, he takes this policy, CBI, customer premises extension. Okay, and he is supplying to one customer, some dealer. and there is a loss at dealer's premises or Maruti. He is supplying to Maruti. Maruti suffers a loss, and in that case, there will be a production loss at insured premises because he will be unable to supply this material to the customer. And in that case, BI will trigger here, and that BI will be paid. Again, the same rule, provided the peril which has operated here has to be covered under insured policy, material damage policy. And if the loss has taken place to second customer, nothing. Then BI loss will not be paid. Okay. Now, failure of utility. As I told you, failure of utility supply, there are three things: failure of electricity. In case of failure of electricity, it says simple. I'll show you the diagram. The only thing, this you need not go through this. You can go through it later on. The only thing is maximum indemnity limit is 60 days, and 60 days comes to 17% of BI value. 60 divided by 365, it comes to 17%. That is why the sum insured restriction BI limit is 17% in case of FOES. Okay. And this is the minimum waiting period, 24 hours. Less than 24 hours interruption, no claim is payable. Maximum is 60 days. That means 17%. Okay. ये बंद करना पड़ेगा. Okay. Lot of disturbance. Now you see this diagram. So you will understand failure of electricity. Here is the powerhouse. Powerhouse is supplying power to substation. From substation, it is drawing power to, it is going to insured premises. Now insured has taken this policy. What it says, if there is a damage to nearby substation premises, physical loss or damage to the property of substation arising out of a peril which is covered in insured policy, in that case, here the business interruption loss will trigger, and that will be payable under this extension, FOES extension. But if there is a damage in power generation plant, then this loss will not be paid. It will be considered as second tier. What we are supposed to consider, last leg of power supply. Another question, if there is a damage to transmission line, again, no loss is payable. People are confused. They think that this transmission line damage will also trigger BI. No. Only when the substation premises, there is a physical loss or damage to the property, which results in interruption of power supply to the insured premises, then only BI claim is paid. Okay. Same is the case with gas supply. Rules are same, maximum 17%, 24 hours waiting period. And here, instead of electricity, here it is gas plant. Gas plant, again, gas goes to compressor station, and from compressor station, insured is getting compressed gas through pipelines. Okay. So if there is a physical loss or damage to the nearby compressor station, which results into interruption in gas supply at insured premises, and insured suffers a BI loss due to interruption in production, then that BI loss will be paid. Understand? Again, this gas pipeline is excluded from this coverage. There is a damage to gas pipeline, no BI. Only if there is a damage at the compressor station premises, then only loss will be payable. There is no loss at gas plant also. This can be your Bombay High, your or any other plant, a platform where the gas is taken out, and from there it goes to pumping station. There can be series of pumping stations, but we are concerned with last pumping station from where you are getting the gas. Now, same formula applies to failure of water supply. Here, instead of gas, water plant, pumping station, and then client. Everything is same. So there are three extensions: FOES, FOGS, and FOWS. Failure of water supply. Now, ingress egress cover. We were talking about this. There are a few more extensions. These are all CBI. Now, CBI is when the material damage loss has not taken place within the plant premises. Now, what it says, it covers loss of gross profit sustained due to interruption or interference of business activity. Interruption or interference arising out of denial of ingress or ingress to or egress. आने जाने में अगर कुछ बाधा पैदा हो जाए, there is a denial of entry or exit from the plant premises. समझे? Caused by insured peril. ये important है. Insured peril की वजह से अगर ingress egress effect हो रहा है, in that case, this is covered, but this cover is rarely given, only in mega policy, subject to getting RI approval. Reinsurers approval is very much required. GIC does not allow this ingress egress cover, but I have seen international market, they are considering. So that is why loss limit has to be inserted based in consultation with the reinsurance market. So ingress egress is not considered here in India. In large risk policies, sometimes it is done with the approval of GIC. If GIC agrees, then only we give it. And they can change the wording. There is no standard wording. In one of the case, I found this wording, so I have used it. It says interference arising out of denial of ingress. Denial, it is ingress means entry. Egress means exit. So entry and exit agar deny ho rahi hai, it can be in the situation of your right and strike also. Arising out of insured peril. Insured peril. Say the most common example is flooding. Flooding is insured peril, which is covered under the policy, but it has taken place outside the plant. And because of that, ingress and egress, both is affected. Your entry is affected, outside is affected. So in that case, the business will suffer loss and that BI loss will be payable. Or storm, due to a storm, your there was a big tree which has fallen in front of the main gate. Now this entry is denied. So these things can be covered, but it is a very wider cover. That is why it is to be given very cautiously and with the consent of reinsurance company. Your prevention of excess. Yes. Vijay Mohan, बोलिए जल्दी से.
So, okay, denial of access and ingress egress, it is one of the same?
No,
or
it is different. I'll come to denial of access also.
Okay.
It is different. Okay, now let us see first prevention of access. Prevention of access is given by GIC. And what it says, it covers reduction, loss of gross profit. Anna. So resulting from cessation, interruption, interference to the business activity, consequence of a physical damage to property belonging to insured or other property. So whether it is belonging to insured or other property, understand, this is very important. Lying within the radius of 5 kilometers. So this is important. Damage to property is must in prevention of access. And that is why GIC agrees for prevention of access, not for denial. Because in denial, this line is missing. Damage to property line is missing. Here it says, anything in denial, I'll show you that definition also, which GIC is not agreeing. Denial is much wider. Here, damage to property, whether it is damaged by insured peril or uninsured peril, it does not matter. In ingress egress, it is due to insured peril only. But here, irrespective of peril, if the property is damaged within the radius of 5 kilometers, which is causing prevention of access to the insured premises, then loss is payable. But damage to property is a must. and inland only. This damage has to be inland only. Access, denial of the prevention of access, which prevents or hinders the use or access to the premises, excluding port blockage. Port blockage is not covered, is specifically excluded by GIC, and inland only. These two things are important. And this coverage is restricted only for 4 weeks over and above the policy time axis. Now the example is, if within the 5 kilometers, if the access is denied by floods, okay, then or a storm, which is causing a damage, physical damage to the road, or due to a storm, lot of trees have fallen, or some other boundary wall is damaged, gate is damaged, some physical damage of the property has to be taken place, whether it belongs to insured or not, that is immaterial. And this accident has to take place within 5 kilometers from the insured premises. Then consequent BI loss is payable. Okay, due to non-supply or raw material, other supplies shall be paid. So this is the example of prevention of access. But your denial of access, prevention of, here's the photograph, this kind of situation. If this is the access road, only access road, and this situation has come, so this has led to prevention of access. But denial is very, very wider. Denial of access, this word is missing. Please understand. Which prevents or hinders the use or access, excluding port blockage. So what it says, physical damage to property is not there. So due to any reason, due to curfew, due to government prohibition, due to bandh, due to civil agitation, due to political violence, any damn thing, if it is happening within the near the plant premises, access is denied. Again, the area of 5 kilometers is not defined. It can happen anywhere. If there is a bandh, if there's a curfew in the city and access is denied, nobody is reaching to the factory and there's a production loss. So denial of access will pay. It is a very, very wider cover. In India, it is not allowed. Okay. Additional increased cost of working. Somebody was asking that. Now, additional increased cost of working is what? It says the same thing. Your economy limit does not apply. So increased cost of working, anything which is not payable, that can be paid under additional increased cost of working. So I gave you that example. The client incurred 8 crores rupees. Economy limit was 2 crores. Then 6 crores. Had he taken additional increased cost of working, this is not built in. This is add-on cover extension, which has to be taken by the client. So had he taken that, he would have recovered that additional amount of 6 crores also. So any amount to be paid over and above the economy limit is also payable under sorry, just a minute. So that is payable under sorry. I'm sorry. Achha, another condition, not only that, ki over and above the your economy limit is payable. In case the client purchases an item by way of increased cost of working. So what it says, if the cost is incurred in capital asset nature, say for example, instead of hiring a DG set, he purchases a DG set. That can also be paid under additional increased cost of working. It will not be paid under increased cost of working alone. But you can take it, you can recover it, cost of capital asset nature. But so at the end, but the residual value of such capital item shall be considered at the end of indemnity period. What does it mean? I'll give you an example that in order to save production loss, instead of hiring a DG site, you purchase DG site for 10 lakhs rupees. Okay. You can recover, but the residual value will be deducted. What does it mean? The surveyor will assess how much is the value at the end of indemnity period. If the indemnity period is 18 months, after 18 months, how much value the DG site is going to fetch. If the assessed cost is 8 lakhs, then client will only get the difference. Difference means 10 minus 8, 2 lakhs will be given under additional increased cost of working in that situation. Okay. And the liability is not to exceed the sum insured. Sum insured means if he has taken 5 crores and so up to 5 crores, company will pay over and above the increased cost of working. Is that fine? And that's all from my side. Thanks a lot. It was a long session. I was thinking I'll finish it in 2 hours, but it took me around 3 hours. Okay, anyway, no problem. The idea is, even if it takes time, doesn't matter. Fundamentals should be made clear. Idea is to spread knowledge. And those who have attended, I hope their knowledge levels have increased a lot. And now I am open to your queries. Yes, Rohit Singh, what is your query?
You have not given any details about saving in standing charge.
I have not given details about saving in standing charges. हाँ, तो बॉस वो मेरे ख्याल से वो स्लाइड इसमें है नहीं. अब मैं बता देता हूँ आपको. I'll explain that. Saving in standing charges details में कैसे हैं? जैसे for example, I gave few examples that time. See, the logic of reduction of saving in standing charges is that I told you, because loss is computed based on gross profit. And gross profit, how you are computing that, whether you take net profit plus standing charges, because you are supposed to take 100% standing charges, otherwise you will suffer under insurance, or on turnover basis, what you are doing, turnover minus working expenses. What does it mean? If you reduce working expenses, all your standing charges are automatically included in that. So computation of loss, you are paying 100%.
Can you give example?
Example I am giving. Now, just say for example, during the lean period, when there is no production, what client is going to do, this is a normal practice, although he knows 100% I am going to get. But what he does, unnecessary expenses, he will reduce. He will stop the canteen. He will some of the workers will go on he will say, Tata, bye-bye, you come after 6 months. There's no work right now. Unnecessarily, I don't want to give you salary. I don't have money. Insurance company will pay me claim only after 1 year or so. So right now, I don't have money to pay you. He will remove gardener. He will stop advertisement. He will cut down the traveling expenses of marketing employees. They will say unnecessarily why you are unnecessary, unless the visit is very, very essential. I have seen special instructions, they are released by the top management. All your tour and travel will be approved only by CMD during the crisis period. They call it crisis period. There is no production. Plant and machinery is under repair. And unnecessarily you want to organize a conference. What is the fun? Who will permit? They will not permit. Of course, it is a standing charges, which ultimately he will be recovering, but he is not incurring. And these are the examples of savings. There are hundreds of such examples.
Actually,
he may reduce number of guards.
Mainly what I was talking is major expenses pertain to depreciation, interest, and repair and maintenance. Suppose during the last year, the repair and maintenance expense was quite high, and currently, because those machines are damaged, so repair and maintenance, we will be claiming
naturally, वो भी saving होगा.
Second is the depreciation, because during the indemnity period, the comparative rate of depreciation same if even if we apply same depreciation, rate of depreciation, because its value will be reduced at the time of you can say during the indemnity period, the depreciation will be lower.
हाँ,
Third
depreciation
is
का भी आएगा cost. बिल्कुल सही है. You are 100% right. The saving in depreciation भी होगा, saving in power भी होगा, saving in.
Third is the interest. What we see is many a time there is, you can say, during that, suppose during the indemnity period, if one is able, one is not paying interest at all or paying lesser interest because they have already paid all the, you can say, bank or FD debenture amount, etc. Then there can be saving in interest also.
बिल्कुल
But
सही है.
but these, I don't find these examples in any of the books or in any of the major survey reports also. They don't indicate any such, you can say, detailed saving in standing charge. Even the Institute of Engineer book, they are not giving any example detailed how to calculate. They are just giving simple example that, okay, saving of interest or like that is there, but they are not giving method of calculation.
Method of calculation is to be seen from the survey report. If some surveyor has calculated, then only you can work out. Otherwise, it is theoretically. You should understand the concept. Why we are not paying saving? Because it is not being actually incurred. And if you keep on paying all these expenses, although he is not incurring, it is over indemnity. This is what I am trying to explain. If he is saving, there are hundreds of savings. You are rightly said. The depreciation, I don't think there will be a saving in depreciation. Depreciation will remain the same in the books of account. Or interest, many times I have not seen any case of interest also, because bankers, they don't relax interest. So interest is also paid many times as a standing charges only, even during the interruption period, same amount of interest, because you are talking of a very rare situation where debentures and other savings, he tries to repay the loan. He tries to recover more money from the bank during the restoration period, because he needs money for making payment to the customers, to the suppliers, to the manufacturers. So rather than giving back whatever money he has, he will try to incur in restoration of the plant and machinery. So bank loan will not be repaid. I have not seen any particular case where
I am talking about rare examples only.
Rare, of course.
Because secondly, working capital, because there is lesser requirement of working capital. So certainly that will
that interest
that will
be same.
Lower,
Yes.
you can say, interest. But I practically I don't find any example in any of the books. If you have any, you can say, any practical examples, then also I think
Sir,
you should
all
forward.
these examples, what you have given and I have given, we can jot it down, and a new book can be written where all these examples can be given. Unfortunately, very few books are available, and the best book I found is Raleigh's book of on business interruption. There, lot of examples have been given, and that can be referred, which I refer. Okay.
What about advanced loss of profit?
Advanced loss of profit is not applicable in BI policy. Advanced loss of profit is related to your project insurance policies, CAR and EAR policies. That is out of our syllabus, today's syllabus. Advanced loss of profit I cover when So advanced loss of profit is totally different. That is in project insurance. When the project is delayed, a project is likely to be commenced on 1st of January. Instead of 1st of January, it starts. It commences from 1st of July. Then that will be taken as delay in a startup, and that loss will be paid in that situation. That is advanced loss of profit or delayed startup.
Can you spell the name of that author, Raleigh's?
Rallies.
RALL.
RALIES.
Okay, sir. Thank you.
Okay. Right. Any other question?
Yes, VP Gaurav here.
Sir, Uday Kumar.
Gaurav Sharma here.
हाँ जी, हाँ बोलिए.
कौन? Who are you picking up?
Anybody?
Gaurav here.
Are Gaurav. Yes, Gaurav. Please.
Yeah.
You are here on this platform. Very good. I am very happy.
Yeah, throughout. It was very lucid.
Nice.
First of all, thanks to you. I mean, very, very informative and very lucid. And you explain it the way, I mean, probably nobody can. So my question is, supposing I'm having an indemnity period of 24 months, okay? And my plant or let us say the property is still under reconstruction or restatement phase. And how do I take care of, let us say, the renewal part of material damage and BI as to when it should trigger, or should I wait for it to be done? I mean, what would be your advice to an insured for both the policies while the period?
See, material, Gaurav, listen, BI policy is not required to be renewed unless the business comes into operation once again. But material damage policy has to be renewed in time, because there is a possibility of another accident, and there is a possibility, say for example, part of the plant is damaged. Okay, there are different sections. So material damage can definitely take place in other sections of the plant. So material damage policy has to be renewed, but BI will, if the business, say for example, the entire plant is closed. In that case, the BI policy, there is no question of renewal unless it is restored. But again, if the part of the plant is closed, one section of the plant is closed, rest is all working, then BI for rest of the plant on reduced sum insured has to continue on reduced sum insured, because this much portion will not be taken into consideration. You got it? Got it or not? Are say yes or no?
Yeah.
Got it?
I got it.
Very good. Thank you. Any other query?
Sir, Uday Kumar here. Sir, actually, in a comprehensive O&M for a windmill plant, they have replaced the gearbox on a free of cost because they are having a comprehensive O&M. But insured has taken a BA policy wherein they are putting this, insurance putting this exclusion, wherein the manufacturer or supplier or repairer of the property is responsible either by a law or contract, because there is, as per contract, they have done a pre-replacement. Then the material damage provision is not there because there is no payment from the insured side.
Exactly.
So, but what is your view on that? Because as far as the breakdown is concerned, it is a covered peril. There is no exclusion. Only the part is that whether it is paid by the
I got your
the O&M contract. Yeah.
I got your point. If you really ask for my frank opinion, BI should have been paid, but the companies, they are not paying. Reason being, material damage proviso is violated. That is the reason companies are not accepting their liability. Ideally, BI loss has triggered. Of course, the manufacturer, what they expect, you recover that BI loss also from the manufacturer. This is what I have seen in market. Number of claims have taken place, number of opinions they have been taken. Frankly speaking, I am of the opinion companies should admit the liability, but because of that material damage proviso, that is the biggest problem. If you entertain such claim, there will be an audit query and it will be a hell of a problem for the concerned person who is going to admit the liability, because material damage proviso is not complied with, which says there has to be a trigger in your material damage policy. And in this particular case, BI, your material damage policy claim is not registered at all. because your exclusion clearly says any loss which is coming under manufacturer's warranty is not to be registered in material damage policy. So unless there is a trigger in material damage, there is no question of BI. That is the stand taken by all surveyors, majority of the surveyors. And it is, I agree, in principle, we should, but unfortunately, as per terms and condition, it is not payable. Okay.
One more question, sir. So what is the difference if we assess the loss under consequential loss policy or IR mega risk policy? I have noted one point that it should be always be in IR and IR policy. It is a difference method. Is there any other difference is there on the
No, fundamentally, there is no difference. Fundamentally, the basis of loss calculation remains the same, whether it is mega, whether it is IR, whether it is ordinary fire LOP policy. Maybe in mega policy, some of the add-on covers might have been granted, which are not there in standard fire policy, because standard fire policy, your add-on covers are restrictive. Okay, all add-on covers are not given. But basic fundamentals, which I am going to cover in my, see, this is, I have not covered 100%. This is hardly 50% of my session. Abhi calculation of loss is very much there. Then your lot of endorsements, lot of memos, lot of clauses which are yet to be explained, alternate basis clause, and all these things which are there. I have closed this session, but important clauses are there, alternate basis clause, your departmental clause, which are there, this departmental clause, all these things are there in my presentation, but I cannot cover in a single session. This I'll cover with examples of accumulated stock clause. The presentation is ready. Your professional accountant fee, fines and penalty clause, new business clause, policy memos, goods manufactured at other premises, all these things. So under insurance, application of under insurance on increased cost of working, memo 2, memo 3, return of premium. So all these things is yet to be covered, steps for computation of loss. So this fundamentals will remain the same, whether it is BI loss, IR loss, or kuch bhi. And then loss examples, steps for computation of loss. These are the various steps which are supposed to be followed for calculating a loss. Everything cannot be covered. This is the example which I have given. This is the way loss is calculated, computed. Loss calculation, another exercise. This is another example. Understanding the essentials of loss calculation, applying this chart, this loss is calculated. Solution continues. Then third exercise. So this I'll be covering on some other day, this balance part of your BI section, BI. So many things are there. All in all, there are 80 slides. So rest of the things we can calculate, we can discuss. So far, whatever I have covered, in that any other question, I'll be happy to reply. Otherwise, rest of the things I'll be covering in my...
all the slides?
Huh?
Will you forward all the slides?
I will forward only the portion which I have covered, not all. Okay, balance in my next session, whenever I decide, either this month or next month, then part 2 will be discussed, where all these parameters, all these things will be shared. Okay. Otherwise, those who are interested in self-learning, you can visit my YouTube videos where all these presentations are already there. But you will have to have patience to go through those videos. Business interruption presentation is already there. More than 10,000 views have already come. People are looking at those videos, but still, in case you require further clarification, of course, then this kind of sessions will be arranged. I'll be arranging sessions, similar session. Now, next session will be part 2 of BI policy. First part I have completed, and second part, this remaining portion will be done in my second session. Okay, those interested can join the second part also. Those who are really interested in finding out how the actually losses are calculated. So for them, those who are working in claims team, dealing with claims, BI claims especially, countering with these surveyors. So all these things can be calculated, can be discussed. Any other question?
No, sir, will we get recording of this session, sir?
नहीं, recording boss नहीं share होता है, presentation share होता है.
Okay.
ठीक है dear?
Thank you, sir.
चलिए, okay, thank you.
Thank you. Thank you.
Thank
Great
you,
day.
Sharma ji.
Hello.
Thank you, sir.
Thank you, sir.
Okay, thanks. और कोई भी question है, then you can raise on my group. Telegram group पे आपका सारे सवालों के जवाब मैं दे दूंगा. Still, some query is there. VP Insupedia Fire and Engineering Group that is working. More than 1,000 participants are also there, already there. Some are active, some are just dummy. They are not opening. But those who are active members, they are asking their queries daily. I am at least giving replies to 10 and 15 queries. No issues. I enjoy giving, sorting out your queries because this is the way I can pass my time. Okay.
Sir, I request you to inform the next session detail in the
हाँ,
WhatsApp.
वो मैं दे दूंगा. उसमें I'll give this on the broadcast group, WhatsApp broadcast group I have made. So all my advanced information will go on that. And I'll post on my LinkedIn. I'll post on this Telegram group, open discussion group. I give advanced message, but still people last time at the last moment they say, sorry sir, I could not see. I give reminders. 4 reminders I have given for this webinar. Still, I got at least 20 requests later on. Sir, we missed this session. So I am helpless. Okay. Thank you very much. Okay. Bye-bye.
Thank you, sir.
Right, sir. Bye.